Okay, good morning, my dear students. So we are live on YouTube and we will be discussing today the two most important chapters of financial management that I kept for today, and this we will be completing super quick, so no worries. Tomorrow you have your examination, just over 2 to 3 hours, and we will be completing this investment decision and working capital management today. And these two are the chapters where problems are possible, tricky problems are possible, and all this kind of adjustments are possible in these two chapters. All the chapters that we discussed yesterday. So students who are watching this today, yesterday we have discussed the 5 chapters. So those 5 chapters, if you have not watched, you can watch the part 1 where we have discussed leverages, capital structure decisions, and dividend decisions, cost of capital, ratio analysis. So all these chapters we discussed in yesterday's class. In today's class, so I hope we are live on the YouTube. You can just put in the live chat, so I will get to know that we are together. I'll be having the feeling that we are virtually connected. So just put a hi on the in the live chat. I'll just wait for 10 to 15 seconds to get a confirmation that yes, audio is audible, video is correct, and I'm looking good or not. Hi Faiza Farveen. Hi, good morning Nivi. Hi Bala. Okay, Badrinath Sarvana, very good pa. Okay, so we are good to go. So I have all my eyes on the chats also. Okay, fine. Right, so everything is all right, everything is set, so we are ready. Okay, we are ready to conquer these two chapters, which is investment decisions and working capital management. No hurry, first we will complete investment decision and then we will continue with working capital management. Okay, it will be very interesting then. Fine. Hi Janila. Okay, fine. Okay, let's continue. Okay, let's continue now everyone. Okay, now everyone just focus here. So we will be starting with investment decision and you will be getting this notes. Okay, you will be getting this notes in the Google Drive link. Okay, fine. So let us start. Okay, let us start without any further ado. Let us start. Investment decisions. Okay, investment decisions. The purpose of this chapter is to take decision whether to invest in a project or not. Okay, whether I want to invest in a project or not. So they'll be giving some information regarding the project as such. This is one project, this is one project, or maybe they will be give you one project and they will ask you whether you have to select that project or you should not select that project. Okay, so that decision you have to take. See, in financial management, the main thing you are learning is to take decision. You are learning to take decision. So whether to take this investment decision, what are the 3 types of decisions? The financing decision, investment decision, and dividend decision. The financing decision and dividend decision we discussed yesterday, and today we will be discussing investing decision, which means where to put your money, which means whether to invest in a project or not. So that is what is investment decision. Now how to take decisions? Okay, you have a lot of techniques. So whenever we are taking any decision, basis some technique we will be taking decisions, correct? We will not be tossing the coin, heads na accept, tails na reject. These things won't work. We have to do some calculations and basis that we will take a decisions. So adaka we have said it, we have a lot of techniques. Okay, so we have traditional methods, okay, that does not use the concept of time value of money, and we have discounting methods that use the concept of time value of money. Okay, that is what we will be studying. So capital budgeting techniques, first is non-discounting method and second is discounting method. Non-discounting method does not use, okay, non-discounting method does not use time value of money concept. Discounting method use the time value of money concept. A time value of money concept you would have already studied in foundation, and also, okay, that I'm not making you revise. Okay, fine. So now non-discounting method, we are having payback period and ARR, which is accounting rate of return, and discounting method we are having discounted payback period, NPV, profitability index, internal rate of return, and modified IRR. Okay, at inter level, okay, mostly questions are asked either from payback period, okay, either from payback period, or they will ask from NPV. Okay, NPV is the most important thing, so they will ask from payback period or NPV, and internal rate of return also on and off they will ask. Okay, on and off they will ask. Modified IRR is also a concept, like a lot of people leave that, but that also we will be covering here, because that is also asked in the examination. In the RTPs also questions are there for modified IRR, and we also have in the new study materials some 1 or 2 problems of modified IRR. So these are the coverage that we will be doing. Okay, and this is the entire coverage. This is what is given in the chapter, and then we will be having estimation of working capital and long problems, adjustments. We will be discussing that. Okay, are you all with me? Just put a yes. Are you all with me? Yes or no? Fine. Now, okay, now let us start with payback period. Okay, let us start with payback period. What is payback period? When I will get my money back. Okay, it answers the question when I will get my money back. That is what is payback period. Okay, when I will get my money back, which means the time required to recover the initial cash flow. How much is the time which is required to recover the initial cash flow? Initial cash flow is also called as the investment, initial cash outlay, or it is also called as investment. So what is the time which is required to recover my initial cash flow? That is what is payback period. For example, every year you are receiving 30,000, 30,000, 30,000. So you are making an investment of 1,20,000 today, and every year for the next 5 years you are receiving 30,000, 30,000, 30,000. So when you are recovering your entire investment, so that is when you are recovering your entire outlay that you have invested, 1,20,000. So first year you will be having 30,000. Second year, one more 30,000 you will get. You would have recovered 60,000. Adhe mari, third year 90,000. Fourth year you will get 1,20,000. So when you recovered your entire amount, it is on fourth year. Okay, it is on fourth year. So 4 years is the payback period. Okay, that is what is concept in single terms. In simple terms, that is what is a concept. Okay, so now this 30,000 every year cash flow is called as annuity cash flow. If it is annuity cash flow, the formula is initial cash outflow divided by annual cash inflows. So 1,20,000 divided by 30,000 is nothing but the payback period of 4 years. Okay, that is what is the amount. Payback period of 4 years, how it is calculated? 30,000 every year you are receiving. When you are recovering your entire 1,20,000 is what is payback period. So 1,20,000 divided by 30,000 is equal to 4 years. That is what is payback period. Now, when we are seeing about uneven cash flows, for example, every year 30,000 I am not receiving. Okay, this is one example. I am receiving the cash flows. My initial cash outlay is 1,20,000, but this 1,20,000 rupees I am recovering. First year I am recovering 20,000, second year 30,000, third year 40,000, fifth year 50, fourth year 50,000, and fifth year 60,000. Then how we have to solve a problem? If the cash flows are uneven, draw a one more column which is cumulative cash flows. Sir, every year how much is the cumulative cash flow that is having? So first year 20,000, second year 20 plus 30, 50,000. Okay, this is 50,000, not 5 lakh. Okay, it's just small mistake. So next is third year. Okay, third year 40,000. So 50 plus 40, 90,000. Fourth year 90 plus 50, 1,40,000. Fifth year 1,40 plus 60. Okay, 1,40 plus 60 is equal to 2 lakh rupees. Okay, one more mistake. Okay, this is nothing, 2 lakh rupees. Okay, this is 2 lakh rupees. Still the answer will not change because after payback period only we are changing. Okay, now when is the payback period, which means when I'm recovering my 1,20,000. If you see, this 1,20,000 is coming in between 3 and 4 years. So I'm recovering my amount between 3 and 4 years. So you just have to find the value. What is that value between 3 and 4 years? That is what is payback period. Okay. See, are you all getting this? I will not be going very deep into the concept. Otherwise, it will take a lot of time. This is just a brush through. So first year 20 and fifth year I'm getting uneven cash flow. So how to calculate? First, identify where is the payback period lying. So payback period is lying between 3 and 4 years. Okay, between 3 and 4 years. So after 3 and before 4. So now payback period is equal to 3 plus. Okay, payback period is 3 plus, because you know it is after 3. So 3 plus. So what is that partial? Okay, when you are partially recovering. So fourth year you are earning 50,000, correct? Fourth year how much you are earning? 50,000. But you actually didn't wanted 50,000. You actually wanted only 30,000 to have 1,20,000 in hand, because till third year you recovered 90,000. Okay, till third year you recovered 90,000. Fourth year you wanted 1,20,000, but you got 1,40,000. You wanted how much? 1,20,000, which means 90, 1 lakh, 1,10,000, 1,20,000. You wanted 30,000, but you actually got 50,000. So 30,000 divided by 50,000, you will get 0.6 years. So that is what is 3.6 years. That is how I have calculated. So it is nothing but how much more is required. 1,20,000 minus 90. How much more I am requiring? 30,000 I am recovering more. Out of what? So out of 50,000 that I am earning in fourth year, I am requiring only 30,000 to recover my entire investment. So that is what is payback period. Okay, 3 plus 1,20,000 minus 90 divided by 50,000. That is what is payback period. 3.6 years. Okay, 3.6 years. I hope you guys are having this clarity. Yes, just put a yes in the chat box, so that we will be having little bit interaction also in the between. Okay, very good. Okay, very good, Sarvana. Yeah, fine. Let us start. Okay, now let's go ahead. So this is what is the concept of payback period. Okay, this is what is the concept of payback period. Now, next one, I am giving you some notes. Okay, in payback period, cash flow should be considered and profit should not be considered. If profits are given, you convert that profit into cash flow and then you calculate payback period. For example, they have given profit before taxes, then tax rate is given, profit after taxes, then depreciation will also be given. So how to arrive from profit to cash flow? So profit after taxes, where depreciation that you have already reduced, that depreciation you add back, you will get cash flow. Okay, you will get the cash flow, which means, okay, cash flow is nothing but profit after taxes plus depreciation. That is what is cash flow. So profit should not be considered, cash flow should be considered. This is one important point that you should be noting. Now, if sometimes they will be asking payback reciprocal also. What is payback reciprocal? It is nothing but 1 divided by payback period. Okay, 1 divided by payback period, nothing, just inverse it. Okay, no new or great concept. Payback reciprocal is nothing, just inverse of payback period. So if the payback period is 3 years, payback reciprocal is 1 divided by 3.33. okay, that is what is payback reciprocal. Now what is ARR, sir? See, ARR is a small accounting, small kuti concept. Okay, ARR is nothing but the rate of return. Average rate of return is ARR. What is rate of return? Return divided by investment. Return divided by investment is rate of return. Return, what is return? Profit after taxes is the return. What is the investment? Initial cash outlay is the investment. Okay, so return divided by investment is average rate of return. If multiple years data is given, then take average return and take average investment. If multiple years data is given and investment amount is given, now you take average return divided by average investment. That is what is ARR. Okay, that is what is ARR. Now in payback period, there are two criticisms. Okay, there are two criticisms. One is that, sir, in payback period, time value of money is not considered. Theory akudu kekala, okay va? So time value of money is not considered. Second is, after payback period cash flows are not considered. Sir, what is this after payback period cash flow? For example, here your payback period is 3.6 years. So in the fifth year, even if I'm receiving 60,000 or if I'm receiving 6 lakh rupees, it doesn't make any difference. So which means after payback period, cash flows are not even considered in payback period. It is not even considered in payback period. So that is one of the biggest criticism that this payback period is having. So first one, okay, first one, because time value of money is not considered. So time value of money is not considered, na, idukku what is the answer? You take discounted cash flow. So time value of money is also now inserted here. So because you cannot add, different year cash flow, but you can discount and then you can add. So next the concept is coming is discounted payback period. It is nothing but payback period, but that payback period is calculated on the discounted cash flow. Same example I'm taking, okay, same example I'm taking, same, ade 1,20,000, ade 20, 30, 40, 50, 60, okay. Now what you have to do, for example, if the discounting rate is 10%, that 10% you apply and then you calculate discounted cash flow. I am hoping that you know how to calculate present value factor, you know how to calculate discounted cash flow, okay. That is the least minimum hope that I'm having with you all, okay. You guys are writing exam tomorrow, so this hope I can have, right? So cash flow into present value factor is equal to discounted cash flow, and from this discounted cash flow you repeat that step, okay, that cumulative discounted cash flow, then identify where you are recovering that 1,20,000. Here your recovery of 1,20,000 is between 4th and 5th year. Then you do, okay, out of this 36,260, what more you were requiring, okay, what more you were requiring. So 1,20,000 was the requirement, 1,07,000 was required, so 12,850 is more that you are requiring, okay, after 4th year. So 12,850 from 37,260, if you do it, you will get 0.34 years. So payback period is 4.34 years. So that is what is your discounted payback period. So now you know the concept of payback period, and also now you know the concept of discounted payback period. But next part, even in discounted payback period, you have a criticism. What is a criticism? After payback period, cash flows are not considered. Okay, after payback period, cash flows are not considered. For example, if you're having some 6th year, in one case you're receiving 1 lakh rupees, in another case you're receiving 10,000 rupees. Now, the discounted payback period for both the cases will be same. So in that case, there is one more criticism here. The criticism is that, sir, after payback period, the cash flows are not considered. So for that, the NPV is there. Okay, for that NPV is there. What NPV is doing? All the cash flows you are considering. Okay, all the cash flows you are considering and comparing that with initial cash outlay. So how that same example you take, okay, same example you take, calculate all the cash flows, okay, calculate all the discounted cash flows, and this will be discounted cash inflows, okay, inflows nalle positive, outflows nalle negative. So this will be discounted cash inflows. So discounted cash inflows minus discounted cash outflows is equal to NPV, okay, is equal to NPV. That is what is the concept. That is what is the concept. So what is NPV? NPV is nothing but discounted cash inflow minus discounted cash outflow is equal to NPV. So in this example, 1,44,410, correct? 1,44,410 is the total, and minus discounted cash outflow is equal to 1,20,000. So NPV is 24,410. Now we have one more criticism in NPV. Sir, what is that one more criticism in NPV? See, NPV talks about absolute value, but it does not consider the size of the project. It does not consider the size of the project. What does it mean, sir? Or example kaga solra, okay, you have two projects. In one project, the discounted cash inflow is 1 lakh rupees and discounted cash outflow is 95,000 rupees. So NPV is 5,000 rupees. In the second case, the discounted cash inflow is 10,000 rupees. The discounted cash outflow is 9,000 rupees. So you're getting an NPV of 1,000 rupees. So what you will do, wherever NPV is more, that project we have to select. You will tell, sir, NPV is more in A, I will select A. But see, actually more profit B is given. Sir, how you are telling more profit B is given? More profit A is giving, right? See, A la you have to invest, okay? A la you have to invest 95,000 to get 1 lakh rupees profit. B la you have to invest 9,000 rupees to get 10,000 rupees profit. So if you were to see 5,000 from 95,000 investment and 1,000 from 9,000 investment, actually B is more profitable. So but NPV will not give you this result. So this was one criticism for NPV. For this only we have profitability index kana, okay? So what is that? Based on NPV you will select project A, but actually project B is more profitable. Now sir, what is profitability index? Profitability index does not give you the absolute profit, but it will give you the index number, so we can compare. Sir, what does it mean? For example, அதே case நம்ம பார்த்துக்கலாம். Discounted cash inflow 1 lakh, discounted cash outflow 95,000. So you are having NPV of 5,000 rupees. But under B, discounted cash inflow 10,000, discounted cash outflow 9,000. You are having NPV of 1,000 rupees. Sir, what is profitability index? Don't do minus, divide. Okay, divide. Discounted cash inflow divided by discounted cash outflow, you will get 1.05. And அதே மாதிரி discounted cash inflow 10,000 divided by discounted cash outflow 9,000, you will get 1.11. So which means for 1 rupee of investment, A is giving you 1.05 rupees profit, 1.05 rupees as your inflow, and B is giving you 1.11 inflow. So who is giving more inflow? B is giving more inflow. That is the reason B is more profitable. So this is what is profitability index. Okay, this is what is profitability index. Okay, sir. Which means, okay, ஒரு consolidation காக சொல்றேன். Discounted cash inflow minus discounted cash outflow is NPV, and discounted cash inflow divided by discounted cash outflow is equal to profitability index. So if someone is asking you what is discounted cash inflow, you know how to calculate discounted cash inflow. All the cash flows into present value factor is equal to discounted cash inflow. What is discounted cash outflow? Discounted cash outflow is nothing but the zeroth value cash outlay. So discounted cash inflow minus discounted cash outflow is equal to NPV, and discounted cash inflow divided by discounted cash outflow is equal to profitability index. NPV positive na accept, NPV negative na reject, NPV 0 na it is indifferent. Now if it is profitability index la NPV more than 1 na accept, NPV less than 1 na reject, NPV equal to 1 na it is indifferent. So Rajagopal is asking, sir, is the first part covered the theory chapter also? If no, can you cover that chapters also? See, theory chapter, I feel that in revision I cannot do any value addition. I just have to read the textbook, okay, that you can do on your own. That is the reason, you know, I'm not taking, time is not that much sufficient for me to take theory chapters. Okay, it is just that it will be better if you read the theory chapters on your own. I can give you some important questions like where and all you have to focus, but we cannot cover the theory chapters as such. Okay, Rajagopal. Okay, so profitability index, you know, now NPV also you know. Okay, now சிலவாட்டி கொஸ்டின்ல I will give you some small intricate points also. In few times கொஸ்டின்ல net profitability index கேட்டுருவாங்க. ஓகேவா, net profitability index, profitability index, you know, சிலவாட்டி கொஸ்டின்ல net profitability index கேட்டுருவாங்க. Sir, what is net profitability index? It is discounted cash inflow minus discounted cash outflow. It is not discounted cash inflow divided by discounted cash outflow. It is NPV divided by discounted cash outflow. அவங்க என்ன பண்ணுவாங்க, டைரக்டா profit NPV divided by discounted cash outflow. Instead of total inflows, you're taking only the net inflows. Okay, that is what is a net profitability index. Suppose for example, okay, example, if the examiner is a sadist person like me, he will ask you questions like that. Calculate net profitability index. All the students will be confused. It is not even given in the, okay, it is not even given in the textbook. Sir, what to do now? See, net profitability index, it has been asked in the examination and also in the RTP it is there. So I'm telling you this. Okay, so net profitability index is NPV divided by discounted cash outlay. Okay, discounted cash outflow. So now payback period is covered, discounted payback period is covered, NPV is covered. Okay, NPV is covered, and profitability index is covered. See, these four topics, okay, these four small topics we have actually covered in no time, Now next one is internal rate of return, IRR. Okay, IRR. Sir, IRR, okay, IRR ஒரு 1 or 2 exams விட்டுட்டு எக்ஸாம்ல கேட்டுக்கிட்டே இருப்பாங்க. ஓகேவா, they will ask IRR lot of time in the examination. If this time they are asking, next 1 or 2 times they will not ask, then next time they are asking, next 1 or 2 times they will not ask. So IRR on and off they will be asking, but you know, you cannot predict the question papers. So IRR also is a very important concept at inter level. Okay, at inter level, even if you are not using the IRR concept here, you will be using the IRR concept in the cost of capital chapter in the YTM method. Okay, in YTM method, this cost of debentures and cost of preference shares, you have to calculate using YTM method. Now YTM is nothing but IRR method. Okay, so adanala this becomes very important because this is used in 2 different chapters. Now sir, what is IRR? IRR is the rate. Here we are calculating rate. Okay, IRR is the rate where discounted cash inflow equals discounted cash outflow, or I can say IRR is the rate where my NPV is 0, because if my discounted cash inflow and discounted cash outflow are equal, then my NPV will be 0. 100 100, this will be equal. So IRR is the rate IRR is the rate at which the discounted cash inflow equals discounted cash outflow, and IRR is the rate at which the NPV is equal to 0. Okay, your NPV is equal to 0. Okay. I had to drink water, but no water is there. Fine. This is my fate, pa. Fine. Now, sir, how to calculate IRR is the next question. Okay, how to calculate IRR is the next question. Now, see, same thing. Okay, the same example I will be taking 1 to 5 years. Okay, 20, 30, 40, 50, 60 are the cash flows. Okay, and NPV is equal to 14,410. That you already know. Okay, NPV is equal to 14,410. You already know this. Now, sir, what to do for calculation of IRR? For calculation of IRR, you should be knowing two NPVs. Okay, you should be knowing two NPVs. One NPV should be positive, one NPV should be negative. Okay, one NPV should be negative. So, if you're discounting at 10% rate, you are getting NPV as positive 14,410. As you increase the discounting rate, your NPV will become negative. So Abdina, you have to take one more guess rate, and that guess rate I'm taking it as 15%. Okay, I'm taking the guess rate as 15%. Once I'm taking the guess rate at 15%, I am getting the NPV as negative 5180. So now I am having one positive NPV and one negative NPV. So first requirement for IRR calculation is you should be having two NPV. One NPV should be positive, one NPV should be negative. Now question number 1, sir, how should I take the guess rate? It will be given. Okay, it will be given in the question paper. Sir, how it will be given? You know what will happen? Question paper like கீழே அவங்க அப்படியே போட்டுருவாங்க. ஓகேவா, அப்படியே அவங்க like they will give you like 12% these are the rates, 13% these are the present value factor, 15% these are the present value factor, 17% these are the present value factor. So like this or 4 or 5. Okay, like this or 4 or 5 will be given. Okay, 4 or 5 rates will be given. So if they are giving this rate in the question paper, it means that it is a guess rate. Okay, it means that it is a guess rate. You should not use any other rate on your own. You have to use the rate which is given in the question paper. Sir, what is this for? Okay, what is this for guess rate? Now which rate I have to take? I'm giving you a trick. Okay, always take the middle rate first. Middle rate first. Now you will get NPV as negative. If you're not getting the NPV as negative, then go to the next guess rate. Okay, directly if you're checking one by one, your time will be gone. So first check the middle. If it is positive, now go forward. If it is negative, now come backward. Okay, mostly the middle rate will be the negative rate. Okay, that is how examinations are framed. Okay, that is how examination questions are framed. So you should not be worrying, but yeah, you should be knowing the concept that you should be having two rates, and two rates, two NPVs. One NPV should be positive, one NPV should be negative. So you have to calculate two NPVs for IRR. Okay, one NPV should be positive, one NPV should be negative. Now I'll be teaching IRR. Okay, I'll be teaching IRR in two different methods. One is conceptual method, another one is formula method. Whichever way you comfortable, you can solve in the examination. Okay, conceptual is nothing but you have two rates, right? For 10%, 14,410 is the NPV. For 15% discounting rate, negative 510 is the 5180 is the NPV. Which means what I'm doing is that I'm just putting it in a table. For 10%, for 10% NPV, for 10% discounting rate, my NPV is 14,410. For 15% discounting rate, my NPV is negative 5180. So what is my IRR? My IRR is the rate at which my NPV should be 0. So at 0, that rate is called as IRR. Okay, that rate is called as IRR, and this is the rate that we have to calculate. This is the rate that we have to calculate. Now, sir, how to calculate this rate, sir? This method is called as interpolation method. What we are doing is we are interpolating. Okay, sir, what is interpolation? Which means if I'm increasing my discounting rate from 10% to 15%, okay, from 10% to 15%, see what is happening to my NPV? My NPV is reducing. As I already said, as and when the discounting rate is increasing, your NPV will reduce. So increase in 5% discounting rate is actually reducing your NPV to 19,590. Sir, how this 19,590 came? 14,410 is your NPV. First 14,410 reduced and it became 0. Then from 0 it again reduced to 5180, and then it has reduced more. So which means it has totally reduced 19,590. Okay, 19,590. How you calculate it, sir? 14,410 minus of minus 5180. So this minus of minus is actually becoming plus. So this is what is 19,590. So increase in 5% discounting rate is giving me decrease in NPV of 19,590. So what percentage increase will give me reduction of 14,450? Because if I reduce 14,450, it will become 0, right? So from 10, okay, from 10, how much I should increase, okay, how much I should increase to get my IRR, okay, to get my IRR. That is what is the concept, okay. So 5% increase in discounting rate is reducing my NPV to 19,590. Now, how much increase in NPV I should be having to reduce my NPV to 14,410? This is what is, okay, this is what is they are asking. So now, what does it mean? Okay, what does it mean? So how to calculate? Appadiye cross multiply we have to do. Okay, cross multiplication panna, you will get this x value. Just do the cross multiplication, which means 14,410 into 5 divided by 19,000, okay, 590. So 14,410 into 5 divided by 19,590, you will get 3.68, which means I should increase my NPV by 3.68% only then, okay, only then my NPV will be 0. Only then my NPV will be 0. Now, sir, how to do this? Okay, now how to do this? How to do this? Now, IRR is equal to 10 plus, okay, IRR is equal to 10 plus 3.68 is equal to 13.68%. See, conceptually I'm teaching you, okay, conceptually I'm teaching you. Even if you don't know, for the first time you're listening, you will be understanding this. So 5% increase in discounting rate is reducing my NPV to 19,590. Now, how much increase in discounting rate I should have to reduce my NPV to 14,410? Just do the cross multiplication, okay, just do the cross multiplication and you will get 13.68%. This 13.68% can also be derived using a formula. Sir, what is the formula, sir? IRR is equal to lower rate plus NPV at lower rate divided by NPV at lower rate minus NPV at higher rate into higher rate minus lower rate. Many people get scared by this formula, okay, but you should not be scared, okay. This formula is nothing but something that we derived there only. It is nothing but 10. What is 10? 10 is nothing but NPV at lower rate, okay, NPV at lower rate, lower rate, sorry, 10 is nothing but lower rate. So lower rate plus, okay, lower rate plus what you are doing, 14,450. What is 14,450? NPV at lower rate, okay, 14,450 is NPV at lower rate minus, okay, divided by NPV at lower rate minus NPV at higher rate. That is what you will get, 19,590 into 5. Into 5 is nothing but higher rate minus lower rate, okay, higher rate minus lower rate. So this is what is the formula, okay, lower rate plus NPV at lower rate divided by NPV at lower rate minus NPV at higher rate into higher rate minus lower rate. That is how this formula is derived. I showed you the derivation itself, okay. So this is what is the formula, lower rate plus NPV at lower rate divided by NPV at lower rate minus NPV at higher rate into higher rate minus lower rate. This is what is the formula. So 10 plus 14,410 divided by 14,410 minus of minus 5180 into 15 minus 10. That is what you will get, 10 plus 14,410 divided by 19,590 into 5, correct. That is what we did in the last time. So 10 plus 3.68 is equal to 13.68%. Same answer, okay, 13.68% is the IRR. Whatever method you can follow in the examination, even conceptual method is accepted, even formula method is accepted, okay, papa, okay. Are you all with me? Yes or no? Just tell me. Are you all enjoyed? Did you enjoy this discussion of IRR? If you are enjoying, just put it in the comment box, pa. I will get to know that yes, you guys are with me, okay. In this revision time, you guys should also be completely motivated. I should also be completely motivated, my dear children. So Ramakrishnan is asking this class PDF. You will get this class PDF. I have asked them to upload in the Google Drive. It will be uploaded in some time. If not, by the end of this live session, you will get it. Okay, definitely you will get it, or I will post it in the Telegram group also. Okay, no need to worry. Okay, everything you are going to get it. No need to worry. Okay, fine. Now, okay, now See, we are actually discussing in a flow, okay? Just enjoy, Panna. I will be telling you something. We are actually discussing in a flow. We started with payback period. It means that when I will recover my money back. Payback period has a criticism that discounting is not considered. So we had one more method which is discounted payback period where the cash flows are discounted. Then in discounted cash flow method, we also had, okay, in discounted cash flow method, we also had this thing that, okay, we also had this thing that there's cash flow after payback period is not getting considered. So cash flow after payback is not getting considered means you have to consider all the cash flows. So then where NPV came, okay, NPV came. NPV, all the discounted cash inflows you will add minus discounted cash outflow, you will get the NPV. In NPV also one criticism is there that it is only an absolute value. It is only an absolute value. So size of the project is not considered. Then profitability index came, okay, profitability index came. In profitability index is nothing but it will give you the index number whether the project is profitable or not. If it is more than one, accept, less than one, reject. Adhe mari NPV more than, I mean positive na accept, negative na reject. That is what we discussed, okay, that is what we discussed. Then we came and IRR is nothing but the rate at which your discounted cash inflow equals discounted cash outflow, or NPV is nothing but the rate where the NPV is 0, okay. IRR is the rate at which the NPV is 0. So whenever any theory question is asked from this chapter, you have to write on your own, okay, you have to write on your own. Don't even leave, okay, don't ever leave, write on your own. You will definitely get some marks. If they are asking what is profitability index, don't get scared, okay, just write down whatever we are giving, whatever I'm telling in the normal words, right, you write it in your own words, you will get at least 1 or 2 marks, right, even if you are not writing the textbook language, okay. So for example, if at all question paper tough pananuna, practical chapters lende theory question kekalam, okay. So that is where we have to be very much prepared, okay. One thing I want to tell you is that don't leave any question in the examination. If you're leaving question in the examination, you are actually leaving some marks also. You write something, definitely 1 or 2 marks you will get, right. That 1 or 2 marks will be helpful in the total also. But first complete the paper. Whichever you don't know, leave that blank. First whatever you know, that complete. For example, question number 1 la 3 subpart irukudhu. 2 subpart you know, third subpart you don't know. Don't get stuck. Do subpart 1, subpart 2. Subpart 3 can leave the page and then go to the next question, okay. Don't write different subpart differently, okay. One question wise order you can change, but subpart order you cannot change, okay. So that is what you have to be very careful. So now you know IRR, okay. Now you know IRR. Now IRR ஒரு problem இருக்குது sir. Sir, what is the problem in IRR? In IRR, we have an underlying assumption that the cash flows are reinvested at IRR rate, okay? We have an underlying assumption that the cash flows are reinvested at IRR rate, which means whatever the cash flows that I'm getting, right, this cash flows that I'm getting, 20, 30, 40, 50, 60. So IRR, the IRR calculation is 13.68%. So what is the assumption that all these cash flows are actually reinvested at 13.68%, and this is actually a wrong assumption. So this reinvestment rate assumption nama correct panna, we will get something called as modified IRR, okay. Modified IRR, MIRR is the concept, MIRR is the concept. So that may not be practically right. So adjusting the reinvesting rate to discounting rate is what is called as modified IRR. In modified IRR, what we are doing, instead of IRR rate, we are taking the reinvestment rate, okay. We are taking the reinvestment rate. If reinvestment rate is given in the question, take reinvestment rate. If reinvestment rate is not given in the question, take discounting rate as reinvestment rate, okay. Take discounting rate as reinvestment rate. Now sir, how to do modified IRR problem, sir? Okay, Gavanipa, only just if you just remember the steps now in the exam hall, just reproduce the step, you will get the answer, okay. Now these are the cash flows, okay. These are the cash flows 1 2 3 4 5, okay. 1 2 20 30 40 50 60, these are the cash flows. Now what is happening in the first year? You are getting 20,000. First year you getting 20,000, you are reinvesting that, okay. You are reinvesting that so that you will get the amount at fifth year. Second year you are getting the cash flow, you are reinvesting that, so you will get the amount at 5 years. So how much here you will reinvest? So first year you will get, if you reinvest for 4 years now, that amount you will get at 5 years, correct? First year you got the amount, you reinvested 1 year na, second year you will get 2 years na, third year you will get 3 years na, fourth year you will get 4 years na, fifth year you will get, and you want the cash flows on fifth year because fifth year the project is ending, correct? So first year you're getting the cash flow, you're not putting on the pocket, you're actually putting in the bank and you're reinvesting it. So what is the reinvestment period? Okay, so first year cash flow you're reinvesting for 4 years, second year cash flow you're reinvesting for 3 years, third year cash flow you're reinvesting for 2 years, fourth year cash flow you're reinvesting for 1 year, fifth year cash flow is in the fifth year itself, so no reinvestment is needed. I'm writing it at 0. Okay, so this is what is the reinvestment period. Now reinvestment period, what is the future value? Okay, what is the future value? Future value is nothing but cash flow into future value factor, right? So this 20,000 reinvesting at 10% for 4 years, what is the value? Okay, what is the value? It is 29,280. So how you are calculating? Okay, just or example, take the calculator, type 20,000. Okay, 20,000. If 20,000 you are reinvesting for 4 years and every year you are getting 10% interest. So 20,000 plus 10% panna, first year I will get 22,000, plus 10% panna, second year I will get 24,200, plus 10% panna, third year I will get 26,620, plus 10% panna, fourth year you will get 29,280 rupees. This 29,280 rupees is just what I have calculated here. Okay, how I have calculated 1.1, which is nothing but 1 plus r to the power n. Okay, 1 plus I to the power n, 1 plus I to the power n. So 1 plus I is 1.1. Okay, so 1.1. So all these things you are doing. Okay, 1.1 to the power 4, 1.1, 1 plus I to the power n. Here n is the reinvestment period. So 1.1 to the power 4 is 1.464, 1.1 to the power 3 is 1.331, 1.1 to the power 2 is 1.21, 1.1 to the power 1 is 1.1, and 1.1 to the power 0 is 1. Okay, that is what we are doing. So now cash flow into future value factor is equal to future value. This is nothing but year 5 value. All the cash flows you are converted into year 5. So year 5 you will be getting 2,32,610. Okay, you will be having 2,32,610 rupees in your hand. This is what you understood. Okay, this step you understood. Nothing pa. Cash flows you will get. Okay, cash flows you will get. All the cash flows you are actually reinvesting it again. So first year cash flow you will reinvest for 4 years. Second year cash flow you will reinvest for 3 years. Okay, you should not write 5. Okay, a lot of people do this mistake. Andala reinvestment period na taniya or table potrukka. Okay, so now third year cash flow you will reinvest for 2 years. Fourth year cash flow you will reinvest for 1 year. Fifth year cash flow is in the fifth year itself. So fifth year cash flow you want in fifth year, so 0 there, no reinvestment required. So future value factor is 1 plus I to the power n, 1.1 to the power 4, 1.1 to the power 3, 2, 1, and then you multiply cash flow into future value factor, you will get future value. Okay, and here your future value is 2,32,610. இப்போ எப்படி பாருனா, now take this as single cash flow. 0th year you are investing 1,30,000 rupees. Your initial cash outlay is 1,30,000. Okay, 0th year you are investing 1,30,000 rupees. Every year you are getting 20, 30, 40, 50, 60. So this every year 20, 30, 40, 50, 60 you converted into fifth year value. So which means 0th year by investing 1,30,000 rupees, fifth year you are getting 2,32,610. Okay, 2,32,610 rupees, which means future value is equal to present value into 1 plus I to the power n. Correct? Future value is equal to present value into 1 plus I to the power n, or present value is equal to future value divided by 1 plus I to the power n, whatever formula you use. So what is future value? This 2,32,610 is the future value. 0th year is the current value. So current value is 1,30,000 into 1 plus I to the power 5 into 1 plus I to the power 5. This I itself you want to find, and this I is nothing but modified IRR. So how to calculate this? Okay, so 2,32,610 is equal to 1,30,000 into 1 plus I to the power 5. Which means 1 plus I to the power 5 is equal to 2,30,000 divided by 1,30,000. So 1 plus I to the power 5 is equal to 2,30,000 divided by 1,30,000 is equal to 1.7893. So 1 plus I is equal to fifth root of 1.7893. So what you have to do is fifth root of 1.7893. Sir, how to calculate fifth root, sir? I don't know, sir. Okay, use log. Sir, I will not. Okay, give you tough methods also. We have a calculator trick, and the calculator trick which we can find out. Okay, we can find out the fifth root. So if you do this calculator trick, and you will find the root as 1.1234. 1.1234. The fifth root of 1.7893 is equal to 1.1234. Now 1 plus I is equal to 1.1234. So I is nothing but 0.1234. So 0.1234. So I is equal to 12.34%. Okay, 12.34%. So this is what is modified IRR. So modified IRR is equal to 12.34%. Now see, for the same values, okay, for the same values, the discounting rate is 10%, okay, the IRR rate is 13.63%, but the modified IRR rate is 12.34%. So why the modified IRR is reducing? IRR assumed the reinvesting at 13.63%. Now you are reducing your reinvestment rate from 13.63 to 10%. So you will get less income. Adhanala your return is reducing to 12.34%. Don't go lot into concept. Just see the method. Okay, just see the method. Or modified IRR. I am just giving you 1 minute time. Okay, just see the method how it is doing. Okay, just take 1 minute and see the method how we are doing. And put in the comment box if you, okay, if you're understanding this, or if you understood this modified IRR. Okay, Faiza Parveen, I will explain one more time. Okay, no worries, I will explain one more time. Yes, 3 hours for both the chapters. Okay, okay, I will tell you this calculation. Can you bring me water, please? Okay. Okay, pa. Okay, Shankarama. Okay, fine. Now, okay, just listen to me. Okay, Kama apdiye, you just listen to me. You can actually get it. So these are the 5-year cash flows: 20, 30, 40, 50, 60. Okay, these are the 5-year cash flows. So first year cash flow, you're reinvesting for 4 years. Apdina 5 years, how much you're reinvesting? Okay, till this you know. Okay, till this you know. Next step, calculate future value factor. Future value factor is nothing but 1 plus I to the power n. So it is nothing. Okay, it is nothing but 1.1 to the power 4, 1.1 to the power 3, 1.1 to the power 2. Like this you have to calculate. Then cash flow into future value factor is equal to future values. So you got your future value as 2,32,610. Okay, 2,32,610. So which means year 0 you invested 1,30,000. Year 5 you got 2,32,610. Now Shankarama has asked, sir, what is this 1 plus I to the power and logic, sir? Okay, see, I will just tell you. Apdiye gavani, okay, apdiye gavani. 100 rupees you are investing, okay, 100 rupees you are investing at 10% for 1 year. Okay, okay, at 10% for 1 year. Then after 1 year, this 100 rupee will become what? After 1 year, this 100 rupee will become what? It will become 100 plus 10%, 110 rupees, right? So 0th year you are investing 100 rupees. First year you are getting 110 rupees. Correct? 0th year you're investing 100 rupees. First year you're receiving 110 rupees. Correct? Adhe mari, second year you're receiving 110 plus 10%. That 100 rupees will become 121. I'm just giving you an example. Okay, I'm just giving you an example. Second year, how much it will become? 1.21. Okay, I mean, sorry, 121 rupees it will become. 121 rupees it will become. Now see, this 100 is present value. Okay, this 100 is nothing but the present value. This 121 is nothing but the future value. Nalla gavani, this 100 is nothing but the present value. This 121 is nothing but the future value. So you all know that how we calculated future value is nothing but present value into 1 plus I to the power n. அப்படிதான் நம்ம calculate பண்றோம். So how we have calculated this 100 into 1 plus 10 percentage to the power 2. That is how you calculate it, correct? That is how you calculate it. Same way, what is the future value here, sir? Now assume you don't know I, you only know 0th year 100, second year 121, you only know this, sir. Then how you should do, sir? Future value is 121, present value is 100 into 1 plus I, what is n, second year it is become so to the power 2, correct? To the power 2. So what is happening, 1 plus I to the power 2 is equal to 121 divided by 100, okay? 121 divided by 100. So 1 plus I is equal to square root of 121 divided by 100. What is 121 divided by 100? Second root of 1.21, okay? Square root of 1.21. Now just do square root of 1.21. Square root you can easily do in calculator, correct? 1.21 ka square root is 1.1. 1.21 ka square root is 1.1. So 1 plus I is equal to 1.1. Therefore I is equal to 1.1 minus 1. So I is equal to 0.1. 0.1 is nothing but I is equal to 10 percentage. See, that is how you calculated, right? Same logic, okay? Same logic. And I get 2 years, illa, inge 5 years, okay? Inge 5 years. So 0th year you invested 1,30,000. 5th year you got the return as 2,32,610. So future value is equal to present value into 1 plus I to the power n. So 2,32,610 is equal to 1,30,000 into 1 plus I to the power 5. So 1 plus I is equal to 5th root of 1.7893. 5th root of 1.7893. So I is equal to 0.1234. So I is nothing but 12.34 percentage. Now, okay, now give me claps that yes, you understood, yes or no, okay? Proper, you understood this logic, how I got this at I, and the logic understood for MIRR. A lot of students leave this, correct? As konja time I'm spending. If question comes na, you should be able to handle. That is what is my objective. Okay, okay, fine. Very good. Arivu, yes, I will explain. Okay, I will explain how to do the fifth root calculation. Okay, fifth root calculation. Everyone take out your calculator. Okay, everyone take out your calculator. Now, soldier, everyone take out your calculator. Okay, take out your calculator. I will tell you how to calculate the nth root in the calculator. Not fifth root, any root I can tell you. Okay, fifth root, sixth root, seventh root, eighth root, 100th root, 200th root. Okay, any root I can tell. How to calculate nth root? Take out your calculator. You type that number, 1.7893, you have to do the fifth root, right? So type this number, okay, type this number 1.7893, 1.7893, calculate, okay, type that number in the calculator, okay, with me, okay, you all do 1.7893 in the calculator. Once you do 1.7893 in the calculator, press this button square root 15 times, okay, press square root 15 times. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. Okay, you will get some values. Okay, so you have pressed square root 15 times. Are you all with me? Have you pressed square root 15 times? Okay, now what you do? Subtract 1. So minus 1. Okay, minus 1 and equal to. Okay, minus 1 equal to. So subtract 1. Now you are doing subtract 1, you will be getting some values, correct? Now divide that number, okay, whatever the value you are getting, divide that number by the nth root. Here you want to calculate the fifth root, correct? So divide it by 5. Nth root, so divide it by 5. So once you have divided by 5, so you will get some value. From that value you add 1, okay, from that value you add 1. So you will get some values, okay, from that value if you are adding 1, you will get some value. From that, press into equal to 15 times. So into equal to 15 times. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, you will get 1.123. You will get 1.1234. Okay, you will get 1.1234. And this is nothing but the fifth root. Okay, this is nothing but the fifth root. 1.1234. This is nothing but the fifth root. I will also tell you the trick how to remember this, but first give me in the comment section, did you understood this fifth root calculation, yes or no? Because I want you all to enjoy the revision, so we all can do this together. Very good, Ari, very good, pa. Okay, very good, pa. Now how to remember this, sir? Type the number, press square root 15 times. Square root 15 times but a minus 1, correct? These two things panta, then divided by 5, this same two things you're replicating it, correct? So because you have subtracted 1, now you're adding 1 here, and because you press because you have pressed square root 15 times, now you are putting into equal to 15 times. Okay, now you are putting into equal to 15 times. Okay, that is what we are doing, because square root 15 times, so here into equal to 15 times, because subtracting 1, so you're adding 1 and dividing by nth root. So that is what we are doing. Okay, that is what we are doing. So this is the nth root, how to calculate nth root in the calculator. This is the calculation trick. Next one, okay, next concept. So MIRR is completed. Okay, with this around 80% of the investment decision chapter is completed, and mostly questions are asked from this only. They will give you some cash flow, some calculation, and from this calculation they will ask you calculate payback period, calculate NPV, calculate these things. Okay, calculate IRR, calculate modified IRR, அந்த மாதிரி questions மட்டும் தான் கேட்பாங்க. And ஒரு 50-60% time அந்த மாதிரி question கேட்பாங்க, and மீதி இருக்கிற 50-60% time they will ask this NPV question. They will ask this NPV word problem question. Word problem, they will give you adjustments, and these adjustments you have to do. Okay, so now for this, how to do estimation of cash flows. Okay, how to do estimation of cash flows. First thing I already said, do not consider profits, consider cash flows. I will just give you what are the adjustment points. From that adjustment points will be continuing. Okay, and working capital management, I feel that lot of people leave that chapter, correct? Neo leave pannonu vittirka, correct? Working capital management. Okay, but never leave that chapter. Very important chapter that is. Okay, and questions, definitely one question, if you're lucky enough, 2 questions can also come, correct? So you should not leave that question, leave that chapter. We will be continuing that chapter after this. Very beautifully I will explain that chapter. Okay, and I will be doing one problem also, and very beautifully I will be explaining that that problem and also the concepts. So be with me till working capital management. Okay, or just 2 hours more and we will be continuing. Okay, 2 hours more. Now yes, machinery purchase questions can be asked. Okay, replacement decision and many questions can be asked. Actually I have solved one problem in my YouTube channel. You can do. Okay, you can do that. Even if you don't know working capital, just listen to me, you will be able to handle. Now estimation of cash flows and adjustment in problems. What are all the adjustments that we can do? First thing, do not consider profits, consider cash flows. Okay, consider cash flows. Second one, how to calculate cash flows. PAT plus depreciation is nothing but cash flows. Why? Because depreciation is a non-cash expenditure, so I am adding back the depreciation to arrive at the cash flows. This is something that you already know, correct? This is something that you already know. So after calculating PAT, if you add back depreciation, you will get the cash flows. Next one, you will be having some opportunity cost and you will be having some opportunity benefit. So opportunity cost and all you have to reduce, opportunity benefit and all you have to add. Sir, what is opportunity cost and opportunity? My YouTube channel name is Taufik Tufail. Okay, the same thing if you write THOFIK. Okay, just 1 minute. If you write this, okay, if you write this, okay, if you write this, you will get. Okay, you will get. Adala, I have done one replacement decision problem. Very properly I have covered this problem. Okay, that problem you can see, and mostly that problem will be covering a lot of adjustments. Okay, fine. Now yeah, consider opportunity cost and opportunity benefit for incremental cash flow calculation. Okay, for incremental cash flow calculation. Next one. Okay, next one, whenever you're writing always answer the question in 3 steps. First step will be initial cash outlay. Second step will be estimation of annual cash flows. Third step will be calculation of terminal cash flows. Sir, what is initial cash outlay? Initial cash outlay, all the 0th year cash flows you put in this. Estimation of annual cash flows from year 1 to till the end of the project. For example, if it is a 5-year project, from year 1 to year 5, what are all the cash flows are there? That you put in working note number 2. Then working note number 3, terminal cash flows. What is the cash flow for the last year? Okay, these 3 working notes if you do, then you can calculate the NPV. Okay, then you can calculate the NPV. And this adjustment, lot of people will get a mistake. What is working capital adjustment? In working capital adjustment, whenever if the question is given that the company is investing 1 lakh rupees in working capital, அந்த மாதிரி ஒரு sentence இருந்ததுன்னா 1 lakh rupees is an investment. Because working capital is an investment, right? So 1 lakh rupees is an investment. That 1 lakh rupees you have to reduce in year 0. That 1 lakh rupees you have to reduce in year 0, and at the end of the year, which means terminal year, you will recover back. So add that 1 lakh rupees in the end. Okay, that is how you have to do working capital management adjustment. So 0th year, okay, 0th year you reduce the working capital amount, and nth year you add back the working capital amount. That is what is the working capital adjustment. Okay, that is what is working capital adjustment. Okay, with this, if you see one problem, okay, if you see some 1 or 2 problem, you will be get to knowing. Okay, you will be get to know how to how to handle these problems. Or I said you right, in my YouTube channel, one problem I have solved. Okay, that problem covers lot of adjustment, that alone you do it. Okay, so with this our investment decision chapter is completed. Okay, investment decision chapter is completed. Now you just put in the comment section like how comfortable you were with investment decision, and were you able to, will you be able to handle questions if at all question comes. Not if at all, definitely question will comes from investment decision. 1 or 2 question if you see you will be able to handle. I just brushed through all the concepts. Now just tell me in the comment section. I'm having all eyes. So after every chapter, reward yourself with a sip of water. Okay, reward yourself with a sip of water. Okay. Oh, Ariv, yeah. Capital rationing and project with unequal life. Okay. See, these two are the concepts rarely asked, but still. Okay. I will. Okay. I will take just 1 minute. Okay. Now, listen to me for 5 minutes. Okay. I will be taking capital rationing now. Okay. I will be taking capital rationing and project with unequal life. No worries, Arif. I will take it. Okay. I will take it. Now, capital rationing decision அப்படினா என்னது? Okay, capital rationing decision அப்படினா என்னது? 5 minutes if you listen, you will get capital rationing. Okay, and one more 5 minutes you will listen. One more 5 minutes you will listen, you will get project with unequal life also. Okay. Harsh, MRF na tire, Tofik na fire. Ayyo. You're making me blush, pa. Fine. So, where was I? Yeah. If you break the flow, I will forget everything. Okay, I'm having amnesia, I forget everything. So now we are studying what? Yeah, capital rationing. So now 5 minutes you listen to me, you will get what is capital rationing, and then one more 5 minutes we will be covering project will unequal life. I will give you, okay, I will give you a brush through how to do that. Now capital rationing, okay, capital rationing capital rationing decision means, okay, capital rationing decision means you are having some investment, okay, you are having some investment and you have to select how much project you have to select, okay. For example, you are having A, B, C and D, okay, you are having A, B, C and D. Sorry and all not required, okay, you can do anything, you can disturb also, okay, fine. Okay, so A, B, C and D. A, B, C and D, suppose you are having 4 projects. Suppose if this is an NPV decision, now what you are going to do, wherever the NPV is maximum or wherever the NPV is positive, that will you will select. For example, here the NPV is plus 100, here the NPV is plus 300, here the NPV is plus 400, here the NPV is plus 50. What you will do, you will select all the project, correct? You will select all the project, but you will be not be having so much money, correct? For example, this required 1 lakh rupees, this required 3 lakh rupees, this required 5 lakh rupees, and this required 1 lakh rupees. But you are having only 8 lakh rupees in your hand. You are having only 8 lakh rupees in your hand. Then what you will do? Then you have to choose, correct? So here, this 8 lakh rupees you are having, right? This is called as capital constraint, okay. This is what is called as capital constraint. Capital constraint means even though you are having many projects, all the projects are having positive NPV, you cannot do all the projects because you are having a capital constraint. You are having only 8 lakh rupees, and that 8 lakh rupees you have to rationally you have to spend, okay. That capital of 8 lakh rupees rationally you have to spend between the project. That rational is what is called as capital rationing, okay. That rationing is what is called as capital rationing. Now sir, how to allocate this 8 lakh rupees between the project? How to allocate this between the project is the next discussion. Sir, how to allocate, sir? Now adha na unakku basis la already sonna, NPV basis la you cannot allocate because NPV does not see the size of the project. Then you have to allocate on the basis of profitability index. Then what you do, calculate profitability index. See, NPV is nothing but discounted cash inflow divided by discounted cash outflow, correct? Calculate profitability index. See, here the profitability index is 0.12, here the profitability index is 0.4, here the profitability index is 0.13, and here the profitability index is 0.05. Then what you do, you have to do ranking. So first rank I will give to this, 1.4 profitability index. Second rank I will give to this, 0.2. Third rank I will give to this. Fourth rank I will give to this, okay. Third rank I will, fourth rank I will give to this. Then this 8 lakh rupees, first you allocate this, okay. So 3 lakh rupees first gone here, okay. 3 lakh rupees first gone here. Then second you give here, so 1 lakh rupees first gone, 4 lakh rupees gone. Now you're having only 4 lakh rupees. Now here 5 lakh rupees is there, okay. And now you can select only 2 projects. You can select only 2 projects, project 1 and project 2. Now here you have to see if the project are divisible or non-divisible. Divisible na partial investment also you can do, because now you are having only 4 lakh rupees. Instead of 5 lakh rupees you invest only 4 lakh rupees. Instead of 5 lakh rupees you invest only 4 lakh rupees. Then how much return you will get? So here the NPV is 1 lakh na, you will get, here the NPV is 100 na, you will get 100. Here the NPV is 300 na, you will get 300. Here the NPV is 400. But this 400 is for 5 lakh rupees and you have invested only 4 lakh rupees. So proportionate NPV you will get. So this NPV plus this NPV plus this NPV is what is the return that you're getting on 8 lakh rupees, is what is the return that you're getting on 8 lakh rupees. That is how is capital rationing is done. If it is undivisible, if it is not divisible project na, you cannot do this proportionate you cannot do na, just do 1, 2 and 3 and see what is the value. Just do 1, 2 and 4 and see what is the value. Whichever is higher, that you have to take. So that is the best proposal. So now here the answer is 1, 2 and 3, which is partial you're taking, okay. 3 lakh partial your investment you're making. This is what is capital rationing decision. You have only one problem in the illustration, okay, in the illustration. So there you will be confused. Sir, profitability index பண்ணல sir. அங்க profitability index பண்ணாம net profitability index பண்ணிருக்காங்க. நல்லா பாரு. அவங்க என்ன பண்ணிருக்காங்கன்னா NPV கொடுத்திருக்காங்க, கரெக்ட்டா? So NPV divided by discounted cash outflow பண்ணிட்டு they have calculated, instead of profitability index they have calculated net profitability index. So even profitability index is the correct, even net profitability index is the correct. Both will give you the same rankings, okay. Both will give you the same rankings, and based on the ranking you have to allocate the project. That is what is capital rationing decision, okay. Are you all with me? Capital rationing decision. Next one, project with unequal life. Okay, project with unequal life. Suppose you're having two projects. Here it is 4 years. Okay, here it is 4 years, and here it is 10 years. So now you're having NPV. Here suppose you're having NPV of say 4 lakh rupees. Okay, and here say suppose you're having NPV of say 9 lakh rupees. Appadinu or example vechiko. What you will do, you will select project B because project B is having a higher NPV, but it is also having more years, correct? So project with unequal life you cannot compare. So unequal life, now first you make it equal. Sir, how to make it equal? You have to put annualized NPV. So this is NPV for 4 years, this is NPV for 10 years. What you have to do, you have to calculate annualized NPV. Sir, how can I calculate annualized NPV? NPV divided by present value annuity factor. You know how to calculate present value annuity factor, right? Present value annuity factor is nothing but, if for example 10% is the discounting rate. Okay, 10% is the discounting rate na, 1 divided by 1.1. okay, 10% discounting rate na, this present value annuity factor for 10% for 4 years you have to do, and here present value annuity factor for 10% for 10 years you have to do. Appadinu panna you will get present value annuity factor. How to calculate present value annuity factor? You can already know. Okay, calculator you can do 1 divided by 1.1. okay, so first year, so 4 years to 1 2 3 4, apdiye grand total click panna you will get present value annuity factor 3.169 8, okay, 7. So this is what is a present value annuity factor. How to calculate present value annuity factor for 10 years? So 1 divided by 1.1, 10 times 1 2 3 4 5 6 7 8 9 10. Press grand total, you will get 6.14456. So this is what is a present value annuity for 1 divided by 1.1, 1 2 3 4 5 6 7 8 9 10. 4 5 6 7 8 9 10. And then if you press grand total, yeah, you will get 6.14456. Now what you have to do, NPV divided by present value factor is equal to annualized NPV. So what is annualized NPV? 4 lakh divided by 3.16987. okay, so 4 lakhs divided by 3.16987, you will get 1,26,188. Same way, 9 lakh divided by 6.14456, you will get 1,46,471. Now this annualized NPV, whichever is higher, this you have to compare. That is how you have to do. Okay, that is how you have to do. Sir, நிறைய பேர் சொல்லுவாங்க, sir, this NPV is for 4 lakh rupees. 4 lakh is for 4 years. Now directly do 4 lakh divided by 4. You cannot directly divide by 4. You have to divide by 3.16. Yeah, time value of money we have to consider, correct? Because of this time value of money concept, we are not dividing by 4. In fact, you are dividing by 3.16. Okay, we are dividing by 3.16 to get an annualized NPV. So this annualized NPV, wherever the annualized NPV is higher, that is the best project you have to select. Okay, I mean inflow. If it is a cost, now wherever the cost is lower, that is the outflow that you have to select. For example, if the cost kuduthiruvanga, then lower the cost. If it is income, na higher the income. That is how you have to select. Okay, that is how you have to select. So now understood how unequal life problem and how we handle. Are you all with me? See, I took 10 minutes extra just to take these two concepts: capital rationing because you asked for it, and unequal life because you asked for it. Okay, now let me know if you all are comfortable with this annualized NPV and capital rationing. Quickly, I'm doing it. Let me know in the comment section. Very good, Ari. Very good, Harish. I'm very happy. Pa. Okay. Very good. When you guys respond, I become very happy. I become very, very happy. Now, let us go. Okay. Now, let us go with a chapter. Working capital management. Okay. Working capital management. அப்படின்னு நம்ம ஒரு சாப்டர் ஸ்டார்ட் பண்ணலாம். இந்த சாப்டருக்கு நான் ஒரு டிஃபரெண்ட் அப்ரோச் வச்சிருக்கேன். ஏன்னா நிறைய ஸ்டூடெண்ட்ஸ், okay, lot of students actually forget this. Okay, lot of students actually forget this chapter. I mean, sorry, a lot of students actually leave this chapter for the examination. This working capital management, lot of students actually leave this. even when I was a student, I also left this chapter, okay? Being a teacher, okay, being a student, I also left. But when I became a teacher, I had to learn, okay? I have to learn. So now I'm teaching this working capital management because I was a lazy person, right? So I don't want you to become lazy. So adnalada I am teaching you in a best possible way, working capital management. Trust me, after listening to me for the next or 1 to 1.5 hours, okay, 1 to 1.5 hours, after listening to me working capital management, you will be able to handle problems comfortably, okay? Okay, now working capital management. Now in this only, first I will do the problem and then I will be teaching you the concept. Okay, first I will tell you how to do the problem, I will give you one understanding, and then I will be teaching you. Now just listen to me. Working capital, first of all, what is working capital? Working capital is nothing but the capital which is required, okay, capital which is required for day-to-day activities. That is what is working capital. So current asset minus current liability, technically that is what is working capital. Current asset, now you will be having inventory, debtors, okay, inventory, debtors, receivables, cash and cash equivalents, all these. Current liability, you will be having payables, creditors, all these things. So current asset minus current liability is the working capital. That is what is technically working capital means. So any company, they have to estimate their working capital. So investment, it is very easy. Sir, you have to purchase this land and machinery and then your business will be starting. But just purchasing the land and machinery, the business will not start. You also have to invest in the working capital, which means salaries you have to pay, okay, a lot of electricity bill, all these things you have to pay, right? All these things is one more investment. That is what is working capital investment. So how much is the working capital that you require for the company? That is how estimate pannula. That is what is working capital estimation. So how to estimate working capital? First estimate all the current asset, estimate all the current liability, do current asset minus current liability. That is what is working capital estimation, okay? That is what is working capital estimation. Now sir, which means first I will estimate the inventory, then I will estimate the receivables, then I will estimate the cash, minus I will estimate the payables. Appadinu panna I will get working capital management. Yes, you are correct. Okay, that is what is working capital management. Inventory also, you have three types of inventory. You will be having raw material inventory, you will be having WIP inventory, you will be having finished good inventory. So all these three inventories you are having, right? So raw material inventory plus WIP inventory plus finished good inventory plus receivable, okay, minus plus cash minus payables. That is what is working capital management, okay? That is what is working capital estimation, okay? And plus you will be having some safety margin, just you should not be having dot amount, so plus some safety 10-20% cushion you should be having, and that is what is the working capital finance that is required. So this is what is the simple or 5 minutes explanation for the concept. Now let us go, okay? Now let us do, I will do a small, okay, I will actually working capital big problems will only come, and the big problems or small problem break பண்ணிருக்கேன். You understand this, okay? Understand this and comfortably you will be handling it. Now see, okay? Now look at this, நல்லா கவனி, okay? Super. Estimation of working capital, okay? Estimation of working capital easy அந்த மாதிரி ஒரு question கேட்கலாம். Raw material, first what we are seeing is raw material estimation. See, budgeted production is 60,000 units. So I am budgeting that I will produce 60,000 units. For every unit I will be needing 2 kgs of raw material, and my raw material cost is rupees 4 per kg, and my raw material holding period is 2 months, which means the raw material that I am purchasing I will keep for 2 months. Appada I will be, I will be putting it in the production or putting it in the processing. So adnala my raw material holding period is 2 months. So now you are having 60,000 units is the budgeted production. So for one unit you need 2 kgs. So what is your annual raw material per kg? So appadina 1,20,000 kgs you need annually. You need 1,20,000 kgs. So 1,20,000 kgs is your annual consumption. How much you should keep in stock? 2 months is your holding period na. 2 months worth of 2 months worth of the raw material you should be having in stock, correct? So appadina 1,20,000 is for 12 months. Now for 2 months what is the stock? So 20,000 kgs is the raw material stock that you should be having. Are you all with me? So annual raw material consumption is 1,20,000 kgs. How much is the stock that you should be having? 20,000 kgs is the stock that you should be having. Now this stock is valued at raw material cost, correct? Raw material cost leda nee value pannu. So this 20,000 kgs into rupees 4 kg is equal to 80,000 rupees. So your raw material stock value is 80,000 rupees. So 80,000 rupees is the raw material stock value. So now you're valued a raw material stock. So you should be needing 80,000 rupees to purchase raw material and to invest in the raw material. So this is point number 1. Sir, logically you understood? Okay. Now what is the formula? Raw material stock, the formula is annual raw material consumption into raw material holding period divided by 12 months or 360 days. That is what is the formula, correct? See, you're not mugging up the formula, you understood the formula. What is annual raw material consumption? Annual raw material consumption is 1,20,000 kgs, correct? Ayyo. So 1,20,000 kgs into 4 rupees per kg. This is annual raw material consumption. Into your raw material holding period is 2 divided by 12. Appdi panna, okay, appdi panna you will get 80,000. Okay, appdi panna you will get 80,000 into 4 into 2 divided by 12. You will get 80,000 rupees. Okay, so this is what is the formula. Okay, you are not mugging up the formula, you are understanding the formula. So raw material stock is equal to annual raw material consumption into raw material holding period divided by 360 days. Okay, divided by 360 days. இதுதான் நான் இங்க எழுதியிருக்கேன். ஓகேவா, இதுதான் இங்க எழுதியிருக்கேன். Average annual raw material consumption divided by 12 months or 360 days into raw material holding period. This is what is the formula that I have explained you through the concept. Okay, I have explained you through the problem. Now just give me a thumbs up, okay, or just give respond me, are you guys understanding or not? Okay, then I will be taking this in this way and then you know we can complete it. Or you just want illa sir formula mattum solli vidunga sir, whatever you say. Very good Ariv, Harsh, very good. Okay, I'm very happy. Okay, fine. So now understood how to value raw material. இப்போ அழகா ஓகேவா, அழகா நம்ம கவனிக்கலாம் WIP எப்படி வேல்யூ பண்றோம் அண்ட் ஃபினிஷ் குட் எப்படி வேல்யூ பண்றோம். ஓகேவா, ஃபினிஷ் குட் எப்படி வேல்யூ பண்றோம் அப்படின்னு இப்ப பாரு, சூப்பரா இருக்கும். ஓகே, now see, now finished good. Okay, finished good, what is happening? First you purchase raw material for rupees 5 அப்படின்னு பாரு. Your raw material per unit is rupees 5. In that raw material you have spent 4 rupees for wages, then you have spent 3 rupees in machinery manufacturing overheads. Okay, manufacturing overheads you have spent 3 rupees. So அப்படினா இங்க பாரு, ஓகேவா, அப்படினா இங்க பாரு, first 3 rupees you spend for raw material, 4 rupees you spend for wages, 3 rupees you spend for manufacturing overhead. So in this manufacturing overhead depreciation is also there. Okay, in this manufacturing overhead depreciation is also there. Okay, and admin and selling overheads ஒரு 3 rupees நீ spend பண்ணிருக்க, admin and selling overheads ஒரு 3 rupees spend பண்ணிருக்க. So your total cost per unit is actually 15 rupees. Your total cost per unit is 15 rupees. So 15 rupees is your total cost per unit, and finished good holding period is 2 months. Finished good holding period is 2 months. Calculate the stock of finished good. Okay, calculate the stock of finished good. If no information is given, how you should value? If they are asking you to value at cash cost, now how you should value? If they are asking you to valuing at prime cost, now how you should value? Prime cost and all you forget. Okay, they will not ask in the examination. Cash cost is very important. Okay, cash cost is very important. Now see, budgeted production is 60,000. So first 60,000 is my budgeted production. Okay, so how much is the number of units that I should be needing in my finished goods stock? So 60,000 units is my total production. This total production is for 12 months. Now for 2 months I would be needing 10,000 units. So I would be needing 10,000 units as finished good in my stock. I would be needing 10,000 units as finished good in my stock. So now what I have to do, I have to value this 10,000. That is what is my finished good valuation, correct? So how will I value? First is I will value at raw material plus wages plus manufacturing overhead. Selling and distribution will not come, understand, okay? Finished good less selling and distribution will not. What is finished good? Finished good is the good that is sitting in your godown. And admin and selling, really sorry, okay, really sorry, God bless me. So admin and selling overheads, okay? So admin and selling overheads, if you see, this 3 rupees you will spend at the time of selling. So if it is in the godown, you are not spending this 3 rupees. You will spend this 3 rupees only after it is going out of your godown, correct? Which means only if it is going to sell, you will be spending this 3 rupees. You will be spending this 3 rupees. So which means for finished good valuation, admin and selling overhead cost will not come. Point number 1, understand this, okay? So raw material cost should come, wages cost should come, and manufacturing overhead cost should come. And if depreciation is given, then depreciation should be removed. So 5 plus 4 plus 2, so 9 plus 2 is equal to 11 rupees. So my finished good should be valued at 11 rupees per unit. So how much finished good I should be having? 10,000 finished good I should be having. So 10,000 finished good into 11 rupees, okay? 10,000 finished goods units I should be having into 11 rupees, okay? Into 11 rupees. This is my, okay, 1,10,000 rupees is my finished good value, okay? This 1,10,000 rupees is my finished good value. 10,000 into 5 plus 4 plus 2, depreciation I'm removing it, okay? Depreciation I'm removing it. So this 1,10,000 rupees is my finished good value, okay? Idhe total cost approach கேட்டிருப்பாங்கன்னா depreciation mo add பண்ணு, okay? Total cost approach கேட்டிருப்பாங்கன்னா depreciation add பண்ணு, cash cost கேட்டிருப்பாங்கன்னா depreciation remove பண்ணு. Sir, which method I should follow? In the examination, if depreciation is given, so they are asking you to calculate on cash cost itself. So remove depreciation and then you calculate, okay? If depreciation not given or illana total cost and the total and the edo vaartha kuduthirupanga, then do total cost approach, okay? Prime cost approach, okay? Not for now, okay? For now prime cost na you are taking only raw material and wages, overheads you are not taking, okay? So suppose கேட்டிருப்பாங்க prime cost ஒரு கேட்டிருப்பாங்கனா you have to value it at prime cost, okay? So now you getting how to value finished good. Sir, அப்படினா what is the formula for finished good? It is cash cost of production. What is cost of production? Material plus labor plus overhead, that is what is cost of production, correct? So cash cost of production into finished good holding period divided by 12 months or 360 days, that is how you calculate it, correct? What is cash cost of production? 11 rupees, okay? 11 rupees into 10,000 units into what is the finished good holding period? I mean 60,000, okay? So 60,000 units, 60,000 into 11 rupees per unit. Finished good holding period was 2 months, 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 yeah, 2 months, 2 months, 2 months. So into 2 months divided by 12 months, appdi panna you will get, okay va? So 60,000, okay, 60,000 into 11 into 2 divided by 12 panna you will get 1,10,000 rupees. This is what is your finished good value. Understood kana? Are you all with me? Okay, so 1,10,000, okay? 1,10,000 rupees is your finished good value. Inge dhaan அந்த ஃபார்முலாவே போட்டிருக்கேன். Okay, finished good is nothing but cost of goods sold, okay? This is what is called as cost of goods sold, okay? Cost of goods sold divided by 12 months into 360 into finished good holding period, okay? Into finished goods holding period, okay? Into finished good holding period into, so cost of production divided by 12 months, okay? Divided by 12 months or 360 days into finished good holding period. This is what is finished good holding period. I mean finished good stock, finished good stock. Are you all with me? Okay, just put it in the comment box. Yes, 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 yes. If you guys respond now, I become very happy. Okay, so make me happy in the live chat. If you make me happy, I will make you happy by teaching a lot of points and covering it very quickly. Very good, pa. Very good, Ashwini, Harsh, Arivu. Okay, fine. Now let us go ahead with finished good stock. Okay, I mean finished good stock completed. Let us go ahead with WIP stock. Now see WIP stock, same facts as question number 2. Okay, same facts as question number 2. The WIP holding period is 0.5 months. Okay, WIP holding period is 0.5 months. Calculate WIP stock. அப்படின்னு கேட்பாங்க. Nothing is given. Okay, nothing is given. Now always assume that 100% of the ஏன்னா WIP னா நடுவுல அவங்க ஸ்டாப் பண்ணிட்டாங்க. ஓகேவா, லைக் யுவர் வேல்யூ. ஸோ இட் இஸ் ஸ்டில் ஒர்க் இன் ப்ராக்ரஸ். ஸோ 100% ஆஃப் த மெட்டீரியல் வில் பி யூஸ்ட், பட் லேபர் அண்ட் ஓவர்ஹெட்ஸ் 50% வில் பி யூஸ்ட். ஓகே, லேபர் அண்ட் ஓவர்ஹெட்ஸ் 50% வில் பி யூஸ்ட். ஸோ தட் இஸ் ஹவ் யூ ஹேவ் டு கால்குலேட். ஸோ 100% of the material is used. So 5 into 100%, but okay, but this labor alone, 50% labor is used and 50% overhead is used on cash cost approach. Okay, on cash cost approach. So that is how you have to calculate the cost. So now it is rupees 8.5 rupees per unit. Okay, 8.5 rupees per unit. So 60,000 divided by 12. Okay, 60,000 units annual production divided by 12 into 0.5, which is nothing but raw material holding period. Okay, and this 60,000 you have to value at what amount? This 60,000 you have to value at adha nama paathola 8.5. Okay, 8.5. How you got this 8.5? This 8.5 is nothing but material 100% completed and labor and overhead 50% completed. Okay, here also selling and admin will not come. Okay, labor and overhead 50% will come. If no information is given, always assume 50% completed. Sir, அவங்க என்ன சொல்லிருக்காங்க? WIP 60% completed. So question is telling 60% complete means don't question the question. Okay, don't question the question. Then you put material 100% complete and labor and overhead 60% complete. Okay, material is always 100%, labor and overhead 60%. Sir, question is telling material 80% completed, wages and overhead 60% completed. Then again don't question the question. Put material 80% and wages and overhead 60%. Okay, I have given you all the permutation and combination how the question can be asked. Okay, so this is how you have to value WIP. This is how you have to value WIP, which means this WIP is nothing but average cost of production. Cost of production is nothing but raw material cost plus, okay, plus wages and overheads. This wages and overheads you have to take the partial cost. Okay, wages and overheads you have to take the partial cost. So this is what is, okay, this is what is WIP holding period. Clarity irka? Clarity irka? Okay, so now you got raw material stock, WIP stock, finished good stock. Okay, raw material stock, WIP stock and finished good stock. Now next one, sir, debtors how to value? Debtors how to value and creditors how to value? See, debtors, if the sales approach na average credit sales. Okay, but cost approach na you have to take the cost approach. So here raw material cost will be there, labor cost will be there, overhead cost will be there, and this selling and administration overheads will also be coming. Okay, because if you're selling na, selling cost will also come. Okay, so total 15 rupees cost. So if they're asking you debtors is valued, okay, if they're asking you debtors is valued at sales, appadina credit sales up. So credit sales divided by 12 months 360 days into debtors collection period. If they're asking you cost na, raw material plus labor plus overhead plus selling and administration overheads divided by 12 months by 360 into debtors collection period is the debtors. So how to value debtors? அப்படியே பாரு. Okay, how to value debtors? Suppose the question tells, assume same facts. Debt collection period is 2 months. Cash sales is 20% and selling price is 20 rupees. So sales approach na, this 60,000 into 80% into 2 divided by 12, 8,000 units. This 8,000 units into 20 rupees. Okay, this 8,000 units into 20 rupees is the total sales approach. This is what is debtors. Okay, this is what is debtors. And a total cost approach na 15 rupees. So the total cost you have to take. Okay, and cash cost na remove depreciation. Okay, remove depreciation. So 8,000 into 14, you will get 1,12,000. Now adhe mari creditors payment period na, credit period 2 months, cash purchase 20%. So what you are purchasing? Raw material you are purchasing. So what is total raw material? 1,20,000 kgs, correct? 1,20,000 into 4,80,000 was the amount. Out of this 4,80,000, 80% is credit purchases. So 4,80,000 into 80% is 3,84,000. This 3,84,000 divided by 12 into 2 panna, you will get the creditors amount. Okay, you will get the creditors amount. No. Okay, was selling and administration overheads will not come in finished good. Okay, selling and administration overheads will not come in finished goods. It will come in debtors. Okay, it will come in debtors. So now, okay, creditor for expenses, all these things you will get. Okay, all these things you will get. At the end, what you have to do? Suppose question will tell, calculate the working capital requirement in cash cost. Okay, calculate the working capital requirement in cash cost and add 20% as safety margin. So now, okay, now see the format. Okay, in this format alone you have to do, put current asset first. In current asset, inventory, raw material stock at 80,000 value you take. WIP stock, that the 21,250 value you took from the working note. Finished good stock, that 1,10,000 take from that working note. So all working note I have given you as a separate question. Okay, then debtors take from this working note 1,12,000. So this is called as gross working capital. So current asset is what is called as gross working capital. From there you reduce current liability. So creditors for goods 64,000, creditor for expenses 44,000. You will get net working capital. Then if they're asking you to have a safety margin of 20%, na, on this 2,14,250 add 20%, then this will be your working capital requirement. 25,710 rupees is your working capital requirement. Hence working capital financing is completed. Okay, working capital financing is completed. Just give me in the comment box, are you having clarity on this working capital financing? Now adhe marida you see the same thing what I've done here. Raw material stock is nothing but average raw material consumption. This formula and all I have not explained, I mean I have not making you mug up. Actually I've explained all this formula through problems. So raw material stock, so raw material stock la average raw material consumption varo, WIP stock la average cost of production varo, finished goods stock la average cost of goods sold varo, debtors la average credit sales if it is in sales approach, then total cost if it is in cost approach. Creditors means average credit purchases. So raw material purchases will come under creditors. Everything is done. Okay, everything is done. இப்போ ஒரு ப்ராப்ளம் மட்டும் நான் காட்டிட்டேன்னா ஈஸியா you will be able to handle. Okay, ஈஸியா you will be able to handle. ஒரு ப்ராப்ளம் மட்டும் நான் காட்டினேன்னா, but for that, okay, for that I want some response in the comment box. So I am waiting for you all. Super. So my dear students, why I am not getting a response? Am I stuck? Okay. See, please repeat debtors. See, debtors, it can be on sales approach and it can be on cost approach. If it is sales approach, then credit sales divided by 12 months or 360 days into debtors collection period. That is what is debtors. Okay, that is what is debtors. And if it is cost approach, now take all the total cost. Anga per unit cost 15 rupees pathola. So if that total cost you have to take. Okay, total cost you have to take. That is what is cost approach. And WIP, what should be the cost? The cost of production is the cost. What is the cost of production? Raw material plus wages plus overheads. Okay, plus overheads. That is what is the cost. Okay. Now, okay, I'll be showing you one problem alone. Okay, I'll be showing you one problem alone so that you get some clarity. Ayyo. Okay, is my voice audible now? Please let me know if my voice is audible. Okay, pa. Okay. Okay, Kana. Yes, Ariv, you're telling important points regarding new and existing firm working capital calculation. See, if you know the concept, okay, if you know the concept, then you don't even have to know this difference between this, new and existing working capital calculation. It is very simple. If you read the question, you will see. Now, if we will see one question, okay, we will see one question where you will understand what we are trying to do. Now, see, this problem, I will be doing afterwards. Okay, this problem I will be doing afterwards. Let me do a different problem. Working capital management. Uh-uh. That question that I'm going to do is repeatedly asked in the examination. So if you're lucky enough, similar question they will be asking you, and you will be thanking me. Okay, now see this problem. Okay, see this problem. Very simple problem. Okay, see this problem. Very simple problem. So this is the cost sheet. Raw material 100 rupees per unit, labor 37.5 per unit, overhead 75 per unit, total cost is 212.50, profit is 37.5, and selling price is 250 rupees. Okay, selling price is 250 rupees. The company keeps raw material in stock on an average for 1 month. So which means the raw material holding period is 1 month. Work in progress for on an average for 1 week. Ayyo, 1 month na I can take in weeks. So answer in weeks. Assume production is carried on evenly throughout the year. Okay, 52 weeks irtirla. Okay, 52 weeks irtirla. Yeah. So month na we can take 52 weeks. Okay, one is in month. Okay. So now work in progress holding period is how much? 1 week. Okay, 1 week. Finished good is 2 weeks. Okay, so finished good holding period is 2 weeks. Credit period allowed by the supplier. Allowed by the supplier, it is creditor payment period. Okay, creditor payment period is equal to 3 weeks, and company allows 4 with credit, which means I will be getting after 4 weeks. So debtors collection period is equal to 4 weeks. Okay, debtors collection period is equal to 4 weeks. The lag in payment of wages is 1 week. So which means this is creditor for expenses. Okay, this is creditor for raw material. Now creditor for expenses. So creditor for expenses, now outstanding expenses. So outstanding expenses for wages. Okay, for wages is how much? 1 week. And outstanding expenses for overhead. Okay, outstanding expenses for overhead is how much? 2 weeks. The company sells 1/5 of the output against cash. Okay, against cash. So 1 divided by 5 is 20%. So 20% cash, 80% credit, okay, 20% cash, 80% credit, and cash amount they will be getting, okay, cash amount they will give you 37,500 rupees, okay, 37,500 rupees. Prepare a statement showing estimate of working capital needed to finance an activity level of 1,30,000 units of production, okay, 1,30,000 units in production. Assume that the production is carried on evenly throughout the year and wages and overheads accrue similarly. Work in progress stock is complete 80% in all respects, okay. Work in progress 80% complete. I already told you, if nothing is given, assume 50%, but here 80% is given, right? So 80% completion we have to take, okay, 80% completion you have to take. Now see, very simple it is, correct, very simple it is. Yeah, you have to do it, okay, you have to do it. Now see, which means first raw material, okay, first raw material stock. I'm just doing the problem. First raw material stock. Sir, how to do raw material stock? Okay, how to do raw material stock? Raw material stock, first one, how much you're purchasing? 1,30,000, correct? So 1,30,000 units. At what you will value? At raw material cost. So raw material cost is 100 rupees. Raw material cost is 100 rupees. Divided by months la kuduthirukanga, adnala na divided by 12 months edukren, okay va? Divided by 12 months into your raw material holding period. Your raw material holding period is 1 month. So this is what is your raw material cost. 1,30,000 into 100 divided by 12 into 1 is equal to 10,83,333, okay, 10,83,333. See the seventh one, அப்படியே நம்ம பண்ணலாம். Seventh one. Oh, 1 month அவங்க 4 weeks எடுத்திருக்காங்க. ஓகே, எவ்ரிதிங் இஸ் வீக்னா அவங்களும் இதுக்கும் வீக்ல கன்வெர்ட் பண்ணிருக்காங்க. நோ இஷ்யூஸ் கண்ணா, ஓகேவா? ஆக்சுவலி நான் மந்த்ல எடுத்தா 10,83,000 வருது, வீக்ஸ்ல எடுத்தா 10 lakhs வருது. ஓகே, ரவுண்டிங் ஆஃப் எரர் தான். ஐ எம் நாட் ராங் பா, ப்ளீஸ் டோன்ட் see with these eyes. I am not wrong, I am correct only. நான் மந்த்ஸ்ல எடுத்திருப்பேன், அவங்க வீக்ஸ்ல எடுத்திருக்காங்க. that is what, even if you take in month, that is not a problem. So 10 lakh rupees is the raw material, okay, 10 lakh rupees is the raw material. Are you all with me, understanding? Okay, so 10 lakh rupees. Now just put in the comment section, first part alone you understood na, okay va? First part alone you understood na, நம்ம மீதி part easy நம்ம understood பண்ணிடலாம். So first part alone you understood na, we can understand all the other parts. Just give me in the comment section that are you understanding or not. So volume, okay, let me, okay, I hope now the volume will be clear. Please just respond me. Please just respond me. Are you guys with me? This is the maximum I can do. Otherwise, I have to hold the mic here. Seri, okay. I will show the question part. Don't worry, I am with you only now. I will show the question. Okay, now, if you understood raw material, everything will be a cakewalk for you. Okay, everything will be a cakewalk for you. Now, see, raw material over. Okay, okay, pa, raw material is over. That is what we did in the raw material. Yeah, raw material. See, instead of just 12 months, அவங்க என்ன பண்ணிருப்பாங்கன்னா 52 weeks எழுதிருக்காங்க. ஓகேவா? So, my eraser is not working. the system is becoming slow like you. Okay, so divided by 52 weeks into 4 weeks. So if you do this, okay, so 1,30,000 into 100 divided by 52 into 4, you will get 10 lakh rupees. Okay, you will get 10 lakh rupees. So this is 10 lakh rupees. Okay, this is 10 lakh rupees. Same way do for WIP. Now see, if you see the question here, the WIP says that it is 80% complete in all aspects, all respects. 80% complete மட்டும் சொல்லிருப்பாங்கன்னா you could have taken 100% material and all others 80%. ஆனா 80% in all respects na material also 80%, wages also 80%, overheads also 80%. This is what they are trying to tell. Okay, this is what they are trying to tell. 80% in all aspects. In all aspects. அப்படின்னா this total cost 212 you are having, right? See, இங்க selling and admin overheads ஒண்ணுமே கொடுக்கல, direct overheads கொடுத்திருக்காங்க. So overheads we will be taking, assuming that this is a manufacturing overhead. So total cost is 212.50. So we will not take 212.50. We will not take 212.50. We will take 212.50 into 80%. Okay, 170 rupees we will be taking as the cost. 170 rupees we will be taking as the cost. So sir, how to calculate this? 1,30,000 divided by 52 weeks into how many weeks is WIP period, into 1 week is WIP period. But this 1,30,000 I have to value at what rupees? 212.50 into 80%. Okay, into 212.50 into 80%, which is nothing but 170 rupees. Okay, this is nothing but 170 rupees. So 1,30,000 into 212.5 into 80% divided by 52 weeks into 1 is equal to 4,25,000. Okay, 4,25,000. Okay, 4,25,000. See, 4,25,000. You have to be very happy. Okay, you have to be very ayo. It is not allowing me to write. Okay, now see, didn't it existed? Okay, now see, so WIP inventory is 1 week. Okay, WIP inventory is 1 week. Now finished goods inventory. Okay, finished goods inventory. Adhe 1,30,000 unit, but finished good is valued at total cost. So finished good is not valued at 170 rupees. It is valued at 212.50. So same thing I'm doing, 1,30,000 units into 212.50 divided by 52 week into finished good holding period. What is finished good holding period? 2 weeks. If you calculate, you will get 10,62,500. So total inventory is over. Raw material inventory, WIP inventory, finished good inventory, all the three inventory are over. Okay, now next. Okay, next inventory kapra next is debtors. Okay, next is debtors. Now debtors is again valued at 1,30,000. Okay, 1,30,000. Now this 1,30,000 units, you don't have to value at sales, you have to value at cost. Debtors is valued at cost. Okay, debtors is valued at cost. So what is the cost here? Into 212.50. Okay, so you are having a total cost of 27 lakh, I mean sorry, 1,30,000 into 212.5. So out of these total, okay, out of this sales alone, you're taking it at cost. So this is nothing but cost of goods sold. Okay, this nothing but 2,76,25,000 is nothing but cost of goods sold. But 20% is cash sales and 80% is credit sales. So take into 80%, this is the credit sales, and this credit sales divided by 52 weeks into 4 weeks is the debtors collection period. So into 4 panna you will get 17 lakh. So same 17 lakh rupees you are getting. Then cash of 37,500 rupees. You are getting the total current asset as 42,25,000. So total current asset of 42,25,000. This question, okay, this question is from RTP May 2019. Okay, so now you are having a total current asset of 42,25,000 is the total current asset. Now adhe mari liabilities. Okay, adhe mari liabilities. First creditors. Okay, first creditors. So first, what is your raw material purchase? 1,30,000. What is the raw material cost? 100 rupees. So 100 rupees is your raw material cost, divided by 52 weeks into what is the raw material holding period, into what is the creditor payment period. The creditor payment period is 3 weeks. Okay, so you are getting 1,30,000 into 100 divided by 52 weeks is equal to 7,50,000. அதே மாதிரி outstanding wages. So wages you have to write the wages cost, and overheads you have to write the overhead cost. So 1,30,000, because this 100 the period is 3 weeks. For this 37.5 and 75 the period is 1 week and 2 week respectively. So அதே மாதிரி you will be having outstanding wages also, and you will be having outstanding overheads also, which is 1 week and 2 weeks. Same calculation, you will get the current liabilities. So your net working capital is 30,06,250 dot. Let me know if you are clear with this question or not, because usually financing of working capital question will be similar to this only. என்னெல்லாம் twist போடுவாங்க, depreciation போட்டுருவாங்க. So you have to remove depreciation. Okay, that is one more twist that is possible. Okay, இல்ல opening stock closing stock அந்த மாதிரி twist and all possible, but simple question அப்படிதான் கேட்பாங்க. But இல்லனா selling and overheads போட்டுருவாங்க or depreciation போட்டுருவாங்க. That is the only thing that is possible in this question. All these things we have discussed. Just let me know if you guys are clear or not. Very good, Faiza, Farvin, Priyanka. I'm really happy. Ashwini. Okay. See, if you were asking about the question, I've already discussed the question. Cost sheet will be given and all the holding period will be given. So cost sheet and holding period. Okay, cost sheet and holding period. Okay, good question. See, Nivi is asking, sir, why debtors is valued at cost? Adha நம்ம ratiosல we are valuing at sales only. Why debtors? Why நம்ம எப்பவுமே credit sales தான பண்ணணும்? Why we are valuing at cost is the question. Okay, அழகா கவனி, I am replying you. Maybe okay, examல கேட்க மாட்டாங்க, but because you have asked, I like curiosity. Okay, because you have asked, I will tell you. What is working capital financing? Working capital financing means I am asking bank, give me money I need for working capital. That is what is working capital financing. Okay, that is what is working capital financing. So now what I'm doing is that I'm asking bank, for raw material I want this much amount. Okay, what I will ask is, hey bank, for raw material I want this amount. Okay, just 1 minute. Yeah, for raw material I want 10 lakh rupees. Hey bank, for WIP I need 4,25,000 rupees. Hey bank, for finished good I want 10,62,500 rupees. So for my total stock I want 24,87,500 rupees. And bank, you also give me the debt task 17 lakh rupees. Suppose debtors, if you are doing it on sales, actual debtors is calculating on sales only, right? Suppose you are doing debtors on sales, so 1,30,000 into 21.2.5 க்கு பதிலா நீ 250 rupees போட்டுருக்க, because 250 rupees is the sales amount, correct? So your actual debtors will be 1,30,000 into 250 rupees into 4 weeks divided by 52 weeks into 80%, you will get 20 lakh rupees. Okay, you will get 20 lakh rupees. What you are doing, from this 20 lakh rupees you are removing 3 lakh rupees of cost. So if you are asking bank, I want 20 lakh rupees for debtors. Okay, I want 20 lakh rupees for debtors. What will bank tell me? Bank will tell me that, hey, you have included your profit also. Why you want financing for profit? You take financing for cost. You are spending cost, right? Whatever you are spending, you ask me, correct? Why you are for profit and all you are taking a loan? Will you take a loan for profit? Sir, avlo profit vandirukkum, adukku you give me loan, correct? You can overvalue the profit also. So bank is telling that, hey bank, okay, I will not, okay, like we are telling that bank, okay, so we are removing the profit and this is the investment that I want for debtors. So for debtors, I want 17 lakh rupees and some cash also I have to keep. So for that 37,500 rupees. But yeah, from payables, I will be saving 750. From outstanding wages, some 93,750 cash inflow I will be having, and outstanding over is 3,75,000. So 12,18,750 I don't need financing. So net financing I need for 30,06,250. This is what is my net working capital need. So I need 30,06,250 rupees. That is the reason I'm asking bank 30,06,250 rupees. So I am valuing debtors at cost. Nivi, understood? Yes, working capital management debtors will be valued at cost. That too at cash cost. Depreciation also you have to remove. And a bank will tell why you're taking financing for depreciation. Depreciation not spending, right? That is the reason we say cash cost. Sorry. That is the reason we say cash cost. For everyone understanding, everyone. Okay, now I will not be taking so much of time. Okay, let us move ahead. Let us move ahead. Two things. Okay, so financing of working capital, lot of times they will ask, okay, in the examination, adanalada, okay, a lot of times they will ask in the examination, adanalada I'm taking this, okay, adanalada I'm taking this. Now next one, next one, next one, next one. Now see, okay, now see, அதான் அந்த ஃபார்முலாவை போட்டிருக்கேன். ரா மெட்டீரியல் ஸ்டாக் இஸ் ஆவரேஜ் ஆனுவல் ரா மெட்டீரியல் கன்சம்ஷன் டிவைடட் பை 12 months 360 இன்டூ ரா மெட்டீரியல் ஹோல்டிங் பீரியட். சில பேர் இந்த ஃபார்முலா அப்படி கூட போடுவாங்க, ஓகேவா? டெய்லி ரா மெட்டீரியல் கன்சம்ஷன் இன்டூ ரா மெட்டீரியல் ஹோல்டிங் பீரியட். சார் வாட் இஸ் டெய்லி? ஸோ ஆவரேஜ் டிவைடட் பை 360 பண்ண டெய்லி ரா மெட்டீரியல் கன்சம்ஷன். ஸோ ஆல் திஸ் கேன் பி டன். ஓகே, now WIP stock, finished good stock, debtor stock, I mean debtors, creditors and outstanding expenses. And if you do prepare a working capital statement, then this is what is a working capital management, or this is what is estimation of working capital. Now next one, see operating cycle. What is operating cycle? Raw material holding period plus WIP holding period plus finished good holding period plus debtors collection period minus creditor payment period is equal to operating cycle. Sir, I have to mug up one more formula, sir. No need to mug up, my dear chella kuttis. Inga paru, raw material holding period is nothing but raw material stock divided by average annual consumption into 12 months divided by 360 days. So this will come down and this will come up, correct? And raw material holding period will stay here. So the formula for raw material holding period is equal to average raw material inventory divided by average annual raw material consumption into 12 months or 360 days. Now see this chellakutti, this formula. Raw material holding period is equal to average stock of raw material, that stock of raw material average போட்டிருக்க, divided by raw material consumption into 12 months or 360 days. அதே WIP, stock of WIP divided by cost of production into 12 months or 360 days. Finished good holding period, average stock of finished good divided by cost of goods sold into 12 months or 360 days. Debtors collection period, credit sales, okay, credit sales, இங்க credit sales போட்டிருக்கு, ஓகேவா? இங்க நான் காஸ்ட் எடுக்கிற credit sales போட்டிருக்க, ஓகேவா? ஏன் சார் ஏன் காஸ்டா எடுக்கல? காஸ்டா கூட எடுக்கல, ஓகேவா? if the question is asking, then what is creditors payment period? Creditors divided by credit purchases into 12 month or 360 days, okay, into 12 month or 360 days. This is what is raw material holding period, WIP holding period, finished good holding period, debtors collection period and creditors payment period ku formula. So operating cycle is raw material holding period plus WIP holding period plus finished good holding period plus debtors collection period minus creditor payment period. Now see, okay, now see, you have not mugged up the formula, correct? All the formula you have understood. Now see, this is the problem that is asked lot of time in the examination. This problem, okay, this problem, this is even the first problem in your study material. Now see, This is the stock, correct? Balance sheet is given, total, I mean, all the details are given. So raw material stock, WIP stock, finished goods stock, debtors is given, creditors is given. Annual purchase of raw material is given, annual cost of production is given, annual cost of goods sold is given, annual operating cost is given, and annual sales is given. Everything is given. Calculate net operating cycle period. What is net operating cycle period? Raw material holding period plus WIP holding period plus finished good holding period plus debtors collection period minus creditor payment period. That is what is net operating cycle period. Okay, that is what is net operating cycle period. Sir, what is raw material holding period? Raw average stock divided by raw material consumption. Okay, divided by raw material consumption. Okay, divided by raw material consumption into 12 months or 360 days. Okay, into 12 months. அவங்க 365 சொல்லிருக்காங்க. ஓகேவா? Sir, you said 360, sir. If the question is telling 365 days, don't question the question. Take 365 days. Okay, take 365 days. Now, sir, how to do? How to do? நல்லா பாரு. Okay, how to do? First, raw material holding period. Okay, first, raw material holding period. Raw material holding period, what is the formula? Average raw material divided by raw material consumption. Correct? Average raw material. So what is the average raw material? Opening raw material plus closing raw material divided by 2. So 45,000 plus 65,356 divided by 2. This is the average raw material divided by average raw material consumed. Okay, sir, raw material consumption கொடுக்கல sir, purchase கொடுத்திருக்காங்க. purchase எடுத்துக்கலாமா? See, you should not take consumption தானே எடுக்கணும். If at all opening stock closing stock detail is given, you can actually calculate consumption. Correct? Raw material consumption is nothing but opening stock of raw material plus purchase of raw material minus closing stock of raw material. This is what is raw material consumption. Correct? So what is opening stock of raw material? இங்க பாருங்க, நிறைய பேர் will be confusing. Textbook எப்படி கொடுத்திருப்பாங்கன்னா, this is 2008 and this is 2007. So opening stock and closing stock year மட்டும் ப்ராப்பரா பாரு. ஓகேவா? So earlier year opening stock and அதுனா closing stock. Correct? I know you know, I know that you all know this. So what is opening stock of raw material? 45,000 plus purchase of raw material. So what is purchase of raw material? This is the purchase of raw material. 4 lakh rupees is the purchase of raw material. Okay, plus 4 lakh rupees minus closing stock of raw material. What is closing stock of raw material? 65,356. 65,356. So average raw material, average stock divided by raw material consumption into 12 months or 360 days or 365 days இங்க கொடுத்திருக்காங்க. So into 365. Okay, now see. Okay, now see. 45,000 plus 4 lakh minus 65,356. So this is nothing. Okay, this is nothing but 379,644, and this is nothing but 45,000 plus 65,356 divided by 2 panna, you will get 55,178 into 365. So divided by 379,644 into 365 days is equal to 53 days. So raw material holding period is equal to 53 days. Okay, raw material holding period is equal to 53 days. நல்லா பாரு, கண்டிப்பா கரெக்டா தான் இருக்கும். எங்கப்பா? Yes, see, 53 days. Happy, 53 days. Now understood the first part. I always ask for the first part, you understood or not. So first part understood. Raw material holding period 53 days. How I got it? Right. Very good, Harsh, Faiza, Farveen, Arif. Very good. Okay. Okay, pa. So now you understood raw material storage period na everything now you can understood correct raw material storage period you understood na everything now you can understood அப்படியே WIP is nothing but average stock of WIP so opening stock of WIP plus closing stock of plus opening stock of WIP plus closing stock of WIP divided by 2 pan okay so opening stock of WIP plus closing stock of WIP divided by 2 and annual cost of production this is actually directly given in the question into 365 days you will get WIP period also அதே மாதிரி average stock of finished good is nothing but opening stock of finished good plus closing stock of finished good divided by 2 cost of goods sold is directly given in the question so into 365 is 20 okay but 26 days debtors collection period inga sales la value பண்ணிருப்பாங்க so நல்ல கவனி ஃபைனான்சிங் ஆஃப் ஒர்க்கிங் கேபிட்டல்ல டெட்டாஸ் காஸ்ட்ல வேல்யூ பண்ணணும் ஏன்னா தட் நீ பேங்க்குக்கு கொடுக்க போற ஓகேவா ஆப்ரேட்டிங் சைக்கிள் நீயா கால்குலேட் பண்ணிட்டு வைக்கிற ஸோ லாஜிக்கலா டெட்டாஸ் கலெக்ஷன் பீரியட் இங்க நீ சேல்ஸ்ல போடு ஓகேவா ஸோ அதனால ஐம் டேக்கிங் எஸ் கிரெடிட் சேல்ஸ் ஸோ ஆவரேஜ் டெட்டாஸ் டிவைடட் பை கிரெடிட் சேல்ஸ் இன்டூ 365 days you will get 41 days you will get 41 days okay அதே மாதிரி creditors payment period average creditors so opening creditors plus closing creditors divided by 2 divided by what is my purchases இங்க பாரு raw material consumption எழுதாது raw material purchases எழுது ஓகேவா so 4 lakh into 365 is equal to 55 days so operating cycle is nothing but raw material holding period plus WIP holding period plus finished good holding period plus debtors collection period minus creditors payment period you will get 86 days you will get 86 days so this is what is this okay this is what it is operating cycle super question and this question lot of time it will be asked in the examination when I wrote my examination right this question was asked okay this question was asked in my examination everything is given opening plus closing divided by 2 illana first நீ அப்படியே average கண்டுபிடிச்சிடல okay because you are using average right so first எல்லா average raw material average WIP average finished good average debtors average creditors everything average நீ calculate பண்ணிடு then that average you can use okay எப்படி வேணா நீ பண்ணலாம் ஓகேவா எப்படி வேணா நீ பண்ணலாம் but one thing you have to understand for raw material holding period you have to take raw material consumption but for creditor payment period you have to take raw material purchase okay for this because raw material purchase is 4 lakh rupees and raw material consumption is how much 3,79,644 so for raw material holding you have to take raw material consumption and that for that you have to take raw material purchase okay that is one point lot of people doing mistake and I'm telling you then number of operating cycle if what was the answer 56 something was the answer right so how many operating cycles in a year so 365 days divided by the operating cycle that is what is number of operating cycle in a year sir what is the working capital that I will be requiring for this operating cycle see what is the operating cost அவங்களே கொடுத்திருக்காங்க 9,50,000 is the operating cost so 9,50,000 operating cost how many operating cycle இதே divide பண்ணா you will be knowing amount what is required okay amount that is required அப்படிதான் நீ calculate பண்ணணும் see number of operating cycles in a year is 12 months or 360 days divided by the operating cycle and this they are asking right amount of working capital is nothing but 9,50,000 rupees divided by number of operating cycles in a year okay but divided by number of operating cycles in a year see yeah 9,50,000 divided by 4.244 so 9,50,000 is the annual cost na every year எனக்கு 4.244 operating cycle வேணும் அப்படினா for each operating cycle I will be needing 2,23,845 each operating cycle நால it is working capital okay so this is like a very important problem இப்போ நம்ம ரெண்டு ப்ராப்ளம் பண்ணோம்ல those two problems டெஃபினெட்லி அந்த ரெண்டு ப்ராப்ளம் வந்து ஒரு ப்ராப்ளம் கண்டிப்பா வரும்ப்பா ஓகேவா அந்த ரெண்டு ப்ராப்ளம் நம்ம பண்ணணும் அந்த ரெண்டு ப்ராப்ளம் வந்து ஒரு ப்ராப்ளம் ஓகேவா I'm not telling the same problem similar problem number change or plus or minus some adjustment definitely one problem will come pa not come na one எனக்கு மெசேஜ் பண்ணு okay but definitely one problem will come trust me okay I'm not telling I've set the question paper but okay definitely one problem will come from financing of working capital okay from financing of working capital okay or working capital policy ல இருந்து அவங்க போடுவாங்க ஓகேவா or question will be from working capital policy like this one இரு நான் உனக்கு காட்டுறேன் this. Okay, capital policy, conservative, moderative, aggressive. Okay, இது மட்டும் நீ பார்த்துக்கோ, ரொம்ப சிம்பிளா இருக்கும். Okay, so now two very important things we completed. One is financing of working capital and second one is finding working capital through operating cycle. Both the concept completed. Okay, both the concept completed. Okay, now see, one is estimation of working capital. These are the formulas that I've explained. Second one is operating cycle and then finding working capital through operating cycle. This is the formula that we completed. Okay, that we completed. Now, if the examiner is a sadist person like me, okay va, அவன் என்ன பண்ணுவானா holding period கொடுக்க மாட்டான். Okay va, holding period கொடுக்க மாட்டான். அதுக்கு பதிலா stock turnover ratio கொடுப்பா. Like he will tell the finished good turnover ratio is 4 times. What he will tell, finished good turnover ratio is 4 times. Appadina how you have to find the holding period? Your holding period is nothing but 12 months divided by 4 times. So 12 divided by 4 is 3 months. So finished good holding period is just for example kaga solra, what they are telling is finished good turnover ratio is equal to 4 times. Holding period kudukala, you will be confused, sir, what I should do? So appadina finished good holding period is equal to 12 months divided by 4 is equal to 3 months is the holding period. Sir, how, sir? Adhikala na relationship manu kaatirukku. Okay ba, this is the relationship, not the relationship that you are thinking. Okay, this is the relationship of turnover ratios with working capital ratio. Okay ba, finished good stock turnover ratio formula is COGS by finished good stock. Adha nama anige paatho correct. In the ratios chapter itself I told that finished good turnover ratio is COGS divided by finished good stock, and finished good stock is equal to this finished good, and from working capital we got it, finished good stock is equal to COGS by 12 months or 360 days into finished good holding period. So you have two equations, right? Ide vanda, okay ba, ide vanda what you are doing, this COGS divided by finished good is equal to finished good turnover ratio, right? This finished good you will bring here, this 12 months and this finished good holding period you will bring here. So COGS by finished good is equal to 12 months divided by finished good holding period. This COGS by finished good is nothing but finished good turnover ratio. So finished good turnover ratio is equal to 12 months divided by finished good holding period. Okay ba? So finished good turnover ratio is nothing but 12 divided by finished good holding period, or finished good holding period is nothing but 12 months or 360 days divided by finished good turnover ratio. Okay ba, finished good turnover ratio. So holding period ratio valiya kuda sollalam. Okay ba, avanga debtors turnover ratio kuduthiruvanga. So with debtors turnover ratio you can actually calculate debtors collection period. Avanga creditors turnover ratio kuduthiruvanga. So with creditors turnover ratio you can actually calculate the creditors payment period. Avanga finished good turnover ratio kuduthiruvanga. So with finished good turnover ratio you can easily calculate the finished good holding period. Adhe mari raw material, WIP, whatever they can do. So now you understood the relationship between turnover and ratios. Understood the relationship? Are you all with me? Okay, just response. Okay, just response. Super point I have told you. Okay, so with this, the concept, okay, working capital management, I always bifurcate into two. One is financing of working capital, second one is debtors management. Okay, so with this financing of working capital la ஒரு question வரும், debtors management la ஒரு question வரும். Okay va, debtors management la ஒரு question வரும். So with this financing of working capital is completed. Please repeat, just see this, I hope you will understand. Okay, see this, I hope you will understand. Finished good holding period and turnover ratio we are having some relationship. So finished good holding period is nothing but 12 months or 360 days divided by finished good turnover ratio. So holding period is nothing but that months divided by turnover ratio. Turnover ratio is nothing but that months divided by holding period. That is what I am trying to tell. How that relationship in the equation I just derived it. Even if you don't know the derivation, you should know the formula. The formula is holding period is nothing but 12 divided by turnover ratio if in months. If in days, na 360 days divided by turnover ratio. So if the turnover ratio is 10 times, which means the holding period is 360 days divided by 10, so 36 days is the holding period. Got it? Okay, so with this, the concept of financing of working capital is completed. So after completion of each concept, okay, reward yourself with a sip of water. Okay, so let us take a sip of water and then we will move with debtors management. Okay, then we will move with debtors management. Super interesting concept, debtors management. Super நம்ம பண்ணலாம். Okay, instead of one sip, I actually had a 3 or 4 sip. No worries. Sometimes reward can be more also. Basis your happiness or your thirst, whichever is higher. Fine. So the next one, okay, the next one, debtors management. Okay, the next one, debtors management. Now the last concept for today's class, debtors management. Please respond. Are you all with me? Or full energy I want it. Okay, within 1 o'clock நம்மளோட கான்செப்ட் ஃபுல்லா 100% நம்ம முடிச்சிடலாம். So please respond in the chat box. Very good. Okay, very good. Very good. Nivi Harsh. Very good. Now, okay. Last concept. Okay. Last concept for today's class. Okay. Now, this is debtors management. Okay. So, for debtors management, first thing you should know what is debtors. You already know what is debtors. Debtors is nothing but credit sales divided by 12 months or 360 days into debtors collection period. Okay. Into debtors collection period. So you already know, right? Debtors how to do credit sales divided by 12 months or 360 days into debtors collection period. Here also, you know, here debtors can be valued at cash. Okay, here also debtors will be valued at cash. Debtors will be valued at cash, not sales but cash. But why I'm writing this formula is because that you should have an understanding. I confuse correct. Another I'm writing this formula. Otherwise, you should know where data should be valued at cash, where data will be valued at sales. Okay. So operating cycle data sales le value pannu, other places le data cash value pannu. Ratio le also data sales le value pannu. You should know the purpose for what you are doing. So now, what is a debtors management, sir? First of all, what is a debtors? Debtor is a person from where I have to get the money, correct? Debtor is a person from where I have to get the money. It can be a person nala it company kuda irkalam, any individual kuda irkalam. I have to take the money. So one thing, okay, but one thing is that if I'm having a stock is also my asset, debtors is also my asset. Sir, what is the difference between stock and debtors? Stock means it is in my godown. Debtors means I sold and it is in someone else's godown, but I didn't receive the money, correct? I didn't receive the money. So stock means the goods which is in my godown, Debtors means the good that is roaming outside, correct? The goods that is roaming outside, that is what is debtor. So that is also my assets, okay? That is also my assets, but control I have shifted. Because control I have shifted, the profit I have booked. Adnala debtors le profit mirko, okay? Debtors will also have profit. So debtors nama cash kuda nama cost kuda nama value pannu, adala profit nama remove pannu. So that is what is the a small introduction, a concept of debtors. So now what is debtors management? How to manage debtors? See, we have to manage the credit policy and we have to choose the best credit period. Yeah, na? The more credit you are giving, the more will be the debtors. So 30 days means debtors will be different. 45 days credit you are giving, na, debtors will be different, correct? So 30 days means, so suppose credit sales is 10 lakh rupees divided by 12 months or 360 days. Suppose if this is 30 days and if this is 60 days, where debtors will be more? Debtors will be more in debt collection, the 60 days, correct? As and when you're increasing the debt collection period, your debtors is also increasing. Are you all with me? So what is happening? So which means, sir, we want the debtors to be less, correct? Debtor is a risk. So we want the debtors should be less, right? So don't even do any credit sales, do only cash sales. No debtors, no risk. Very good, sir. Not good, correct? Cash sales means sales will not happen. Only because we are getting credit, lot of sales is happening, correct? So when I'm increasing my credit period from 30 to 60 days, what will happen? Now my sales will increase. Okay, my sales will increase. Another people are giving credit period. Sir, then give 2 years credit period, 4 years credit period. Not possible. Okay, the more the credit period, the more bad debts chance is there. So which means there should be some control. There should be some control or some balance. Okay, there should be some balance between these both. So adanala the debtors should be properly managed. Okay, it's a very big area. Debtors should be properly managed. So manage the credit policy and choose the best credit period. So for this, we use the something called as cost benefit analysis. So now what will happen? If you're changing from 30 days to 60 days, okay, if you're changing from 30 days to 60 days, what will happen? If you're changing from 30 days to 60 days, your sales will increase. Sir, sales will increase, the profit will increase, right? No, sales will not directly increase the profit. If your sales is increasing, your variable cost will also increase, right? So sales is increasing, the variable cost will also increase. So what you're actually getting is contribution, correct? What you're actually getting, the profit is contribution. Are you all with me? Correct? Fixed cost will not increase, but variable cost will increase. So sales will increase, the variable cost is also increasing. So actually what is increasing is the contribution. Actually what is increasing is the contribution. So contribution increase is a benefit. What will happen? Sir, if I'm keeping the credit period as 30 days, my sales is 10 lakh rupees. But if I'm increasing my credit period to 60 days, other Tom, Dick and Harry are also coming and purchasing with me. So adnala my sales is increasing to 12 lakh rupees. First it was 10 lakh rupees. Now it is 12 lakh rupees. Okay, first it is 10 lakh rupees. Now it is 12 lakh rupees, which means my contribution, my sales is increasing, which means my contribution is increasing. So this increase in contribution, is what is my profit. Okay, this increase in contribution is what is my profit. Point number one. Okay, point number one, cost benefit analysis. The first benefit that I'm having is increase in contribution. When I'm increasing my credit period, I am getting a profit which is increasing contribution. Okay, point number one. Point number two, if I'm increasing my credit period, my sales will increase and my bad debt will also increase. Suppose I'm having a bad debt of 1%. So 1% on 10 lakh is only 1 lakh rupees, but 10,000 rupees. But 10 lakh rupees into 1%. Okay, 10 lakh rupees into 1% is 10,000 rupees. So bad debt on 10 lakh is 10,000 rupees, but bad debt on 12 lakh is actually 12,000 rupees. So 2,000 increase in bad debt is there, right? That is my cost. That is my cost. Or what will happen if I'm keeping my sales from 30 days to 60 days? Some other people will also come and purchase. So other people are coming and purchasing, now my risk is increasing and bad debt is also increasing. So if I'm keeping my credit period as 30 days, my bad debt will be 1%. But if I'm keeping my credit period as 60 days, my bad debt is becoming 2%, and that 2% is on 12 lakh rupees. Are you all with me? So one cost is increase in bad debt. So increase in credit period will increase in contribution, that is a benefit. Increase in credit period will increase in sales, which will increase my bad debt, that is a cost. That is a cost. So one benefit and one cost. Okay, point number two. Sir, point number three. Nalla gavani, point number three. 30 days la na 60 days pandra. Okay, but 30 days la na 60 days pandra. What will happen if I'm changing from 30 days to 60 days? My debt collection period will increase. My debt collection period will increase. Because my debt collection period is increasing, my sales is also increasing. So because my sales is also increasing, my debt collection period is also increasing, my debtors will also increase, correct? My debtors will also increase. So my debtors is increasing, actually more stock is there outside, correct? More stock is there. Debtor is also an investment, correct? Like how stock is an investment, debtor is also an investment. So which means my my investment is increasing. Okay, but my investment is increasing. So for this increase in investment, you're having some interest cost, correct? Previously, you were having only 5 lakh rupees of debtors, but now because you're increasing the credit period, your debtors from 5 lakh, it is becoming 8 lakh rupees. So this 3 lakh rupees additional investment you will be needing, right? From where you will be getting this 3 lakh rupees? Are you all with me? So this 3 lakh rupees additional, okay va, adukku interest cost irukudilla, that interest cost is the increase in interest cost. So this is increase in interest cost. Okay, so increase in credit period will increase in sales, increase in sales will increase in debtors, increase in debtors will increase my opportunity interest cost. Okay, opportunity interest cost. Had I invested that money somewhere else, I would have got that interest, right? Or I would have got some return, I would have got some return, or interest cost or return. So that return is I'm losing, so that is my cost. Okay, that is my cost. Point number 3. Point number 4. Previously, I was having only 5 lakh worth of debtors. Now, because of increase in credit period, I am having more debtors. Now, more debtors means more people, now more management I have to do, correct? More management I have to do. I have to employ one more people to call all the debtors. Okay, so more management, more admin cost. Okay, more admin cost. So, increase in credit period, one more cost is there, which is increase in management expenses. So, now what I have to do? Because I'm increasing from 30 days to 60 days, what is the benefit that I'm getting and what is the cost that I'm having, adala minus padiva. If I'm having net benefit, I will choose that, or if I'm having net cost, I will not choose that. Are you all with me? So appadina I have to do cost benefit analysis. See, what is cost benefit analysis? Prepare one working note and calculate increase in contribution, that is plus. Prepare one more working note, calculate increase in bad debt, that is 2. Then prepare increase in interest cost, that is 3. Increase in expenses, that is 4. Then net you see, if you are having net benefit, accept. If you are having net cost, reject. That is what is debt task management. Okay, that is what is debt task management. Debt task is valued at cost. Okay, debt task it values at cost. So debt task is nothing but cost of goods sold divided by 12 months by 360 days into debt task collection period. Okay, into debt task collection period. Up how to calculate the interest? So debt task into the interest rate and new debt task into the interest rate. See what is the increase in interest cost? That is what is increase in interest cost. Are you all with me? Yes or no? Okay, well, yes or no? Now we will be doing one standard problem. Okay, we will be doing one standard problem. With this standard problem, we will be ending debt task management also. And that standard problem, I think that it can come in the examination, or a similar problem will come in the examination. Okay, now you understood the concept of debt task. See, conceptually I will go. Okay, I go conceptually, not formula or format wise. Now please let me know in the comment section, did you understood the concept of debt task management? Okay. See, Harsh is learning for the first time. What should I say? Tomorrow is the exam. Today you're learning for the first time. But better late than never. Okay. If you're lucky enough with this learning, if you're scoring some 5 to 10 marks, now you have to give me a treat. Okay. You have I deserve a treat for this. Appadina. Okay. So now cost benefit analysis. Okay. Cost benefit analysis. Now see, I'll be doing one standard problem. Okay. I'll be doing one standard problem. For debt task management. ஒரே நிமிஷம் debt task management, though this is சீக்கிரமா பண்ணலாம். So Faiza, for when you're also, so you should also give me a treat. only if you guys are in Chennai. Debtors management. One minute, okay. I always trust ICI source, you know. Okay, first complete the exam, then we will have the treat. Okay, so tomorrow complete the exam with utmost or happiness. There was one standard problem that I will do. That standard problem we can complete now. This debtors management we can close it. Just 1 minute. This problem you see, okay? This problem you see. I want you to see this problem. This is not allowing me to write. Debtors management. Wow, from Kerala. You know, I love this place, Kerala. I don't know why. This is in my bucket list that I have to visit Kerala at least once. At least once. Definitely I will come Kerala. See, yeah, this problem. Okay. Okay. Now, this is one problem that we are going to see. Now, everyone, management of receivables. Okay, management of receivables. Let us read the problem first. Okay, then you will understand what we are trying to do. Okay, let us read the problem first, then you will understand what we are trying to do. A company wants to follow a more prudent policy to improve its sales. So improve its sales, they want to go little lenient, okay, for the region which is 9 lakh rupees. So present sale is 9 lakh rupees. So currently the sale is 9 lakh rupees and they are having average collection period of 45 days. So their debtors collection period is 45 days, okay. After certain researchers, the management consultant of the company is telling, if I increase it to 15 days, okay, if I increase my credit period by 15 days, my sales will increase by 60,000. I already said, right, if you increase the credit period, your sale will increase and your default estimated is 1.5 percentage. So this is default, it's nothing but bad debt percentage, okay, this is nothing but bad debt percentage. So your bad debt percentage is actually how much? Okay, your bad debt percentage is 1.5 percentage. So which means from 45, if I'm changing to 60 days, this will happen. Then 30 days increase panna, what will happen? From 45 days, if I increase to 30 na 75 days, what will happen? Then 90 days na what will happen? Then 45 plus 70 na 70 plus 30, 100 plus 15. Correct? So 115 days. If I do 115 days, what will happen? This is what they are telling. So 60 days panna, my sales will increase to 60,000 rupees. So from 9 lakh, it will increase to 60,000 rupees. From then from 9 lakh, it will increase to 90,000, 9 lakh 90,000. Then from 9 lakh, it will increase to 10 lakh 50,000. Then from 9 lakh, it will increase to 9, 10, 11 lakh 10,000 rupees. Okay, this is what the information it is given, and this is the bad debt. Selling price is 3 rupees. The selling price is 3 rupees. Average cost per unit is 2.25 rupees is the total cost. Adula variable cost is 2 rupees. Correct? Adula enna solranga, variable cost is 2 rupees. So which means selling price is 3 minus variable cost is how much? Variable cost is 2 rupees. Appadina 1 rupee is my contribution. Okay, appadina 1 rupee is my contribution. And 0.25 rupees is the fixed cost. And the total cost is 0.25, correct? So minus fixed cost is actually 0.25 rupees. So adala 0.75 rupees is my profit. Selling price is 3 and total cost is 2.25. Okay, total cost is 2.25. So adala 0.25 75 rupees is their profit. Summa, I'm just telling you, okay? I'm just telling you this. Required return on additional investment is 20%. I said right that opportunity cost and the opportunity interest that they would have earned is 20%. Assume 360 days in a year. Analyze which of the above policies you would recommend for adoption. Okay. Assume which of the following policies you will recommend for adoption. Now, listen to me. Super in the problem. Okay. A lot of people will struggle, but I know that you will not struggle because you have studied. Now, what I will do, I will just compare one with one. Okay, I will just compare one with one, and the 45 days and 60 days மட்டும் தான் நான் compare பண்றேன். All others you do on your own. Okay, 45 days and 60 days alone I will compare. Now, in 45 days, okay, in 45 days and in 60 days what is happening? Okay, in 45 days and in 60 days what is happening? My sales, okay, my sales was 9 lakh rupees present. Okay, this is actually present. My sale is actually 9 lakh rupees. 60 days how much my sales is happening? 60 days my sale is increasing to 60,000 rupees. So this will be 9 lakh 60,000 rupees. Really sorry. Okay, 9 lakh 60,000 rupees. Now see here, what they're asking is, I want increase in contribution. So from sales I have to get contribution. So 3 rupees is the selling price, 2 rupees is the variable cost. So contribution is actually 1 rupee. Okay, so 3 rupees sale actually 1 rupee is the contribution. So 3 rupees sell panna 1 rupee profit enakku varum, contribution enakku varum. Okay, so actually 1 divided by 3 is the contribution. Are you all with me? Hello, 1 divided by 3 is the contribution. So now what I'm doing, I'm just finding contribution. Sales is 3, variable cost is 2. So what is contribution? 1. So I have my sales amount. I have to find out my contribution. Contribution is nothing divided by 1 divided by 3. Or PV ratio find out. PV ratio is contribution divided by sales by 100. So 1 divided by 3 into 100 is equal to contribution is PV ratio. PV ratio is 33.33%. How much ever you understand. So sales into PV ratio is equal to contribution, or into 1 by 3 pannalo contribution. How much ever you understand. Okay. So now contribution. So now what you have to do? You have to do contribution. Contribution is nothing but 9 lakh. What is my contribution? 1 divided by 3. And then 9 lakh 60,000. What is my contribution? Into 1 divided by 3. So here my contribution will be divided by 3. Panna, my contribution is 3 lakh rupees, and here my contribution is, okay, 9 lakh 60,000 divided by 3 panna, my contribution is 3 lakh 20,000 rupees. So see, first I was earning 3 lakh rupees as contribution. Now I am earning 3 lakh 20,000 rupees in contribution. So what is my increase in contribution? So presently increase in contribution varadu. My increase in contribution is actually 3 lakh 20 minus 3 lakh rupees. That is 20,000 rupees. Okay, that is 20,000 rupees. So my increase in contribution is 20,000 rupees. Okay, point number 1 completed. Okay, point number 1, increase in contribution. Second, bad debt கண்டுபிடிக்கணும். Okay, increase in bad debt. So what is my current bad debt? Okay, what is my current bad debt? அதான் அவங்க சொல்லிருப்பாங்க. Current bad debt is 1%. But 60 days panna your bad debt is becoming 1.5%. So from 1% it is becoming 1.5%. Sir, அப்படினா what you are doing? How bad debt is calculated? 9 lakh into 1% is the bad debt, correct? 9 lakh into 1% is the bad debt. Actually your bad debt is 9,000 rupees. But now what is your bad debt? Your sales is 9 lakh 60,000, but your bad debt is 1.5%. So 9 lakh 60,000 into 1.5% panna, your bad debt is 14,400 rupees. So first your bad debt was 9,000 rupees. Now your bad debt is 14,400 rupees. So what is your increase in bad debt? Actually your increase in bad debt is from 9,000, it is becoming 14,000. It is actually 5,400 rupees. So increase in bad debt is a cost. அதனால தான் நான் நெகட்டிவ் போட்டுருக்கேன். ஓகேவா? So point number 1, increase in contribution. So you earned a profit of 20,000 rupees. Because of increasing, you earned a profit of 20,000 rupees. Second, increase in bad debt 5,400. Okay, 5,400 is the increase in bad debt, which is a cost. Now third one is increase in interest. Okay, increase in interest cost. Interest is nothing but total investment in debtors into what is the return that you would have earned on that investment. So adukku first you have to find out debtors, correct? From debtors itself you have to calculate percentage. நீ என்ன பண்ணலாம் first debtors. Here debtors is valued at cost. Already I told you debtors is valued at cost. Sir, cost in a total cost, correct? Okay. So you have to value at actually 2.25 rupees you have to value. Are you all with me? You have to value at how much? 2.25 you have to value. So which means 2.25 divided by 3 into 100. So which is actually 75 percentage, correct? 75 percentage is the cost. Yena selling price is 3 and total cost is 2.75 rupees. Yena 0.75 is 0.25 is the working, sorry, 2.25. Okay, so 2.25 is the total cost. So actually what is the total cost percentage? So selling price is 3 na, total cost is 2.25. So cost is nothing but 75 percentage is the cost, correct? So sales la 75 percentage panna enakku cost vandro. Are you all with me? Sales la 75 percentage panna enakku cost vandro. So how to value debtors? Debtors is nothing but, okay, debtors is nothing but the sales, okay, the sales divided by, if you do 360 days, okay, into the debt collection period. Okay, but the sales divided by 360 days into the debt collection period. Adha unakku sonnala sales, which is nothing but you have to value at cost. Okay, you have to value at cost divided by 360 days into the debtors collection period is nothing but debtors. This debtors into that percentage is nothing but my interest cost. Okay, it's nothing but my interest cost. So if you see the question here, the cost, how much is the cost? Yeah, 20 percentage is the cost. Okay, 20 percentage is the cost. So 75 percentage podla first is I have to increase my interest cost, correct? So first I have to find out my debtors. What is my debtors? My debtors is sales. What is my sales? My sales is 9 lakh. And then sales podakudadu, cost la podnu. So what is my cost? Into 75 percentage is my cost, or I can also put into 2.25 divided by 3. Okay, this is my cost. If this is my cost, so this is nothing but my cost. So cost of goods sold, I mean cost divided by, okay, cost divided by 360 days. So 360 or 365 days, I assume 360 days. So divided by 360 days into your debtors collection period. What is your debtors collection period? Here the debtors collection period is 45 days, correct? Here your debtors collection period is into 45 days. Okay, into 45 days. So this is nothing but debtors. Okay, this is nothing but debtors. From these debtors, okay, this is nothing but debtors. From these debtors, what is the interest that you will pay? Okay, first debtors calculate panna apprama kuda percentage calculate panna illa na direct inga 20% போட்டா கூட direct interest cost வந்துரும். Whatever is same, first debtors calculate. So textbook la enna பண்ணிருப்பாங்க, இது debtors calculate பண்ணிருவாங்க, then they will put the return on debtors and then increase in the interest cost அப்படி. Now what I am doing is that I am directly putting into 20% here. So debtors is my total investment, and the investment ku 20% is the return that I want. Adhe mari here it is not 9 lakh, it is 9 lakh 60,000. Okay, this is 9 lakh here, this is 9 lakh 60,000 into 75 percentage divided by 360 days into, here 45 days is becoming actually 60 days, into 60 days into 20 percentage. Okay, so here what is my interest cost and here what is my interest cost? So here 9 lakh into 75 percentage divided by 360 days into 45 days into 20 percentage, 16,875 kana. Okay, 16,875. Here how much? 3,60,000 into 75 percentage divided by 360 days into 60 days into 20 percentage, it is 24,000. So in the first case you would have earned 16,875, in the second case you would have earned 24,000. Okay, so you are losing an earning of increase in interest cost. Okay, increase in interest cost, or it is also called as increase in opportunity cost. You can also put it as increase in opportunity cost. Okay, interest cost is not the right word, no, opportunity cost. So now what is the increase in opportunity cost? What is the increase in opportunity cost? So from 16,000 it has increased to 24,000. So 24,000 minus 16,875, it is actually 7,125 is the increase. So this is my cost, correct? This is my cost. Moone value, the admin cost onnume sollala. Okay va? So 1 is 20,000. Okay, this is actually third one. Okay, this is actually third one. So 1 is 20,000. So 20,000 is the benefit, 5,400 is the cost, and 7,125 is the cost. Okay, so now what I am trying to find is the net benefit. Okay, is the net benefit. So 20,000 rupees. Okay, so 20,000 rupees is the benefit, minus 5,400 rupees is the cost, minus 7,125 is the cost. So I am getting a net benefit of 7,475. Okay, I am getting a net benefit of 7,475. Sir, how you calculated this net benefit? This is nothing but 1 minus 2 minus 3. Okay, or minus like given in plus. So 1 minus the increase in interest by bad debt minus the increase. So I'm getting 7,475. This is for 60 days. Okay, this is for 60 days. Okay, இதே மாதிரி ஓகேவா இதே மாதிரி நீ 75 days 90 days and 115 days க்கு போடணும் ஓகேவா 75 90 and 115 75 90 and 115 ஐயோ 75 90 and 115 ஓகே 75 days 90 days and 115 days நான் போட மாட்டேன் ஓகேவா நீ போடு ஓகேவா ஏன்னா எக்ஸாம்ல அவ்வளோ பெரிய கொஸ்டின் கேட்க மாட்டாங்க ஐதர் 2 இல்லைன்னா 3 கொடுப்பாங்க சரி ரிவிஷனால 4 கொடுத்துருக்காங்க இது மாதிரி வந்தா 8 mark problem or even though it is very easy same thing தான் now this 9,16 what will be the sales into what is the contribution what is the increase in contribution so increase in contribution calculate from the present okay from the present what is the increase in contribution from the present what is the increase in bad debts okay present will always be present ஒண்ணுமே வராது ஓகேவா the net benefit you will get so 7475 here you will get some benefit here you will get some benefit and here you will get some benefit wherever the benefit is higher that is the best credit policy that is the best credit policy அப்படியே see the answer first is 7475 will match okay see this answer 7475 okay fingers crossed let's see if it is matching or not என்ன பஸ் 7642 is there any mistake that we did incremental credit sale is 60,000 variable cost 40,000 what is the increase in contribution just 1 minute bad debts okay expected profit ஓகே நெட் பெனிஃபிட் பா நத்திங் ஓகேவா இது ரெண்டுமே மைனஸ் பண்ணு ஓகேவா ஸோ அவங்க அதுக்கும் கால்குலேட் பண்ணியிருக்காங்க ஸோ 206,767 minus 199,125 is actually 7642 okay is actually 7642 is what is our answer okay 7642 we also got this right 7475 just 1 minute some mistake we did we didn't do any mistake I'm very sure credit sales 9,60,000 so variable cost is 6,40,000 fixed cost is 75,000 okay very good so this is actually contribution right so credit sales plus fixed cost avanga edho pannirukanga 6,70,000 this is nothing but total cost so bad debt is 9,000 14,400 okay expected profit 6,75,000 7,15,000 so my total cost is 7,15,000 right yeah 9,60,000 into 75% 9,60,000 into 75% is 7,20,000 அவங்க என்ன எடுத்திருக்காங்க 7,15,000 why ஒரே நிமிஷம் okay just 1 minute 7,15,000 7,15,000 they took total cost we also took total cost okay got it okay just one small trick here okay just one small twist here see here okay see here what we actually did is we directly put 75% here okay we directly put 75% here but actually fixed cost is common right see here 9 lakh okay for 9 lakh so what you have to do is this 9 lakh mattu bifurcate pannu okay this 9 lakh rupees you are having right this 9 lakh rupees first what is the contribution okay first what is the contribution is actually 3 lakh rupees the contribution is actually 3 lakh rupees illana variable cost and fixed cost mari paru okay variable cost and fixed cost mari paru what is the variable cost is 2 rupees small thing okay small thing yeah variable cost is 2 variable cost is 2 rupees so 3 rupee la 2 rupees is the variable cost okay 3 rupee la actually 2 rupees is the variable cost so 9 lakhs la actually 2 rupees is the variable cost so 2 divided by 3 okay 2 divided by 3 panna you will get this 66 so you will have one variable cost and you will have a fixed cost portion here okay you will have a variable cost and you will have a fixed cost portion so contribution is 3 lakh na variable is 6 lakh rupees so 6 lakh rupees is the variable cost okay 6 lakh rupees is the variable cost and you also have a fixed cost you have a fixed cost of some 75 rupees okay so that is what is 2.25 so 6 lakh 9 lakh 9 lakh into 75% is nothing but 6,75,000, and this is what is total cost of 6,75,000. Okay, this is what we took as total cost as 6,75,000. So this 6,75,000 is okay. This 6,75,000 is okay, but here into 75 percentage podama, just one thing you have to do. The only thing that is common is that fixed cost is common. Okay, well, fixed cost is common. So for 9 lakh na 9,60,000. So fixed cost we have to keep it as common. So 9 lakh 6 lakh is the variable cost. Na 9,60,000 what is the variable cost? Appdinu nee calculate pannu. Okay, va. So 9,6 into 6 divided by 9, you will get 6,40,000. So 6,40,000. Okay, 6,40,000 plus 75,000. You will get a total cost as 7,15,000. So instead of 7,20,000, you have to take 7,15,000. Okay, you have to take 7,15,000. So 7,15,000 divided by 360 days into 60 days into 20 percentage panna, you will get 23,833. 23,833. So 23,833 minus 16,875. Your actually increase is 6,958. Okay, your actually increase is 6,958. So now 6,958 you're having. So 20,000 minus 5,400 minus 6,958 is equal to 7,642 is equal to 7,642. So 7,642 is the net benefit. Okay, 7,642 is the net benefit. So this is what is okay, that is what it is. So small okay, small adjustment what you have to do. Fixed cost should be common for all, and variable cost alone will vary. Okay, variable cost alone will vary. நம்ம என்ன பண்ணிட்டோம்னா 75% போட்டுட்டோம்னா fixed cost நம்ம vary பண்ணிக்கிட்டு இருக்கோம். கரெக்ட்டா? That is a small a twist we did. Okay, that is the small thing we did, but fixed cost is common for all. So debtors is valued at total cost. So total cost you calculate it. Okay, total cost you calculate it. So this is how you will get 7,642. So 7,642 is the answer. Okay, 7,642 is the answer. Net benefit of 7,642. Yeah, 7,642, net benefit of 7,642. Then you calculate this for others also. You calculate this for others. Okay, 7,642, 5,450, 5,625 and negative 594. So whichever is the best, that is the best credit policy. So 7,642. So number 1 will be the answer, but you have to do for number 2, number 3 and number 4 also, and then you have to compare. So this debt, okay, this debtors management, this is like a standard problem where all the points are covered. So with this, you just tell me whether you understood this problem, yes or no. And if we do mistake, there is more chance of understanding. Had I not done the mistake, okay, na, you would have done the mistake in the examination hall. Okay, there is a possibility. And then now you know that because of mistake, you will remember this, your eyeballs will come out whenever you do the problem now. Now just let me know this debtors collection period. Is it clear? Yes or no? Okay, so Nivi understood. Others who were actually studying for the first time, Harsh, Faiza, so all those, are you guys understanding? See, if you see this answer format, you will get confused. Another, I will recommend you to go conceptually, the format that I am making, simple terms. So for this alone, you make a working note. Okay, for calculation of debtors alone, you make a working note. So total cost you have to do, right? So total cost is nothing but variable cost for fixed cost. Actually, what will happen, if in the question variable cost fixed cost bifurcation is given, appada in the working note varo. Lot of the time variable cost fixed cost bifurcation itself will not given. So அவங்க என்ன பண்ணுவாங்கன்னா வேரியபிள் காஸ்ட் ஃபிக்ஸட் காஸ்ட் பைஃபர்கேஷன் கொடுக்காம டைரக்டா டோட்டல் காஸ்ட் மட்டும் தான் கொடுப்பாங்க. அதனால தான் I also assume it is total cost and we went. Okay, but you have to read the problem properly. If variable cost and fixed cost bifurcation is given, fixed cost will be common for all and variable cost alone will vary, then the total cost will be okay, but then total cost will not be very proportionate. ஏன்னா fixed cost ஒரு element இருக்குது. Then total cost let you have to value debtors. So from this total cost what you have to do, okay, from this total cost you have to divide 360 days into the debtors collection period, you will get the answer. Okay, into the debtors collection period into 20%, you will get the answer. So that is how this question debtors collection period, okay, debtors collection period is managed, okay, which is managed. And this is like a standard problem where everything is covered. If you know this and if you're lucky enough, a problem this or similar to this will be coming in the examination, okay, and I will be wanting my treat. Okay, I will not be leaving you all, I would be wanting my treat. I'm very adamant in those terms. Okay, and don't see this answer study material answer ரொம்ப கன்ஃபியூசிங்கா இருக்கும். கான்செப்சுவலா போனா ரொம்ப சூப்பரா உனக்கு புரியும். ஓகே, ரொம்ப சூப்பரா உனக்கு புரியும். So management of working capital have actually two parts. One is financing of working capital. Financing of working capital ரெண்டு விதமா ப்ராப்ளம் வரும். ஃபர்ஸ்ட் டைப் ஆஃப் ப்ராப்ளம் இஸ் எஸ்டிமேஷன் ஆஃப் ஒர்க்கிங் கேபிட்டல். செகண்ட் டைப் ஆஃப் ப்ராப்ளம் இஸ் ஆப்ரேட்டிங் சைக்கிள். தென் வி ஸ்டடிட் டெட்டாஸ் மேனேஜ்மெண்ட். ஓகே, தென் வி ஸ்டடிட் டெட்டாஸ் மேனேஜ்மெண்ட். டெட்டாஸ் மேனேஜ்மெண்ட் இஸ் கம்ப்ளீட்டட். மூணாவது ரொம்ப சிம்பிள், ரேரா வரும், பாம்பல்ஸ் மாடல். இட் இஸ் நத்திங் பட் இஓக்யூ மாதிரி தான். ஓகே, இஓக்யூ படிச்சிருக்கல, அதே இஓக்யூ 2AB/C, the same formula is used for பாம்பல்ஸ் மாடல். அதே அவங்க ஹோல்டிங் பீரியட் ஆர்டரிங் காஸ்ட்ல கேஷ் கொடுத்துருவாங்க. ஸோ how much is the ideal cash that I should have, it is called as Baumol's model. So if they're asking Baumol's model, don't get confused. Baumol's model is the same EOQ formula that you learnt in costing, right? 2AB/C, the same. Okay, but 2 into annual requirement of cash into the fixed cost for cash. Okay, but that is what is called as the buying cost. Okay, and divided by carrying cost per annum. It is what is the carrying cost for the cash. The same thing if you do root now, you will get this Baumol's model. Okay, you will get the Baumol's model also. So with this, okay, and cash budget, adala romba simple. Okay, cash budget. So with this management of working capital chapter is actually completed. Okay, is completed. If you're lucky enough in the discussion which today you will be solving problems, okay, or you will be getting marks. Okay, but silly mistakes mattum panna, like how we did one silly mistakes, adha mari silly mistakes mattum nee panniradu. Okay va, that alone you have to handle. So now with this we are coming to an end. The time is also up, okay, and we are coming to an end. So let me know whether this discussion that we made for investment decision and working capital management was helpful or not. Okay, let me know in the comment section. So you know, I will be happy. First thing, I will be happy, I'll be motivated, I will be asking you all, because that is what, you know, make a person happy. If students are liking and if students feel that this was important and this is actually fruitful in the examination, I am actually making efforts in the right direction. Okay, so my eyes are in the comment section. So let me know if you have any other queries also, and I'll be there to help you all. Okay, for my students I'll be there to helpful. See, cash budget, why I'm not taking is that first thing, cash budget is something that is similar to budgetary control that you studied. Okay, budgetary control that you saw, right? Budgetary control, that is similar to that. And second thing is, rarely it is asked. So safely you can leave also, or you just give a brush, or you just give a skim to the one problem. Okay, one problem or study material or problem irukudhu, if you just skim that problem, you will be able to handle cash budget problems also. And it is rarely asked, so I'm not willing to spend so much of time here, okay, because time is precious, but you can skim on your own. Okay, so you know, you get that confidence. Payable management is similar to receivable management. Okay, one thing, there are different concepts, but I have actually made one single format. The format is that if there is an increase, okay, if there is an increase or decrease in the credit period, what will happen? If there is an increase and decrease in the credit period, what will happen? That is what we have to see. So we just have to see the cost benefit analysis. So receivable management or payable management, if you prepare a cost benefit analysis, you will get the answer. Okay, you will get the answer. No other thing is there. Okay, all problems will look like a similar kind. Either they will ask you which is the good credit policy, or they will ask you whether should I give discount or not. Okay, so adanalada. Okay, pa. Fine. Very good. So with this, okay, with this, we are coming to the end of this live session. I hope you guys found this helpful, okay, and all the very best, okay, all the very best for the examination. Tomorrow is the last examination, okay. 2-3 points alone I want to tell you, okay. First point, okay, first point is that don't miss out on the working notes, okay. Write working notes properly. Don't do calculations in the mind and the calculator. Write working notes properly. Second thing, after every question write the comment, okay, because lot of times comment also carries marks. Question liye comment kuduthiruvanga, like analyze and comment அந்த மாதிரி ஒரு வார்த்தை கொடுத்துருவாங்க, but you guys miss it, okay. So always have a habit, after writing the answer, comment it, or அந்த ஆன்சர் எடுத்துட்டு ஒரு டப்பா போட்டுரு, ஓகேவா. So that you do it, okay. So you will get to know that how we have to so you will not miss out on comments, or you will not miss out on giving answers. So that is something you have to see. And third thing is that read the question properly, okay. Read the question properly. When you get the question paper, first start with FM. I already said in the yesterday also, today also I'm telling that, okay. Today also I'm telling that, okay. Today also I'm telling that you should be what is telling in textbook, so many project is shown, some is good IRR, some is good in NPV, which one to choose? See, there is a conflict in NPV and IRR will be affecting only because of unequal life. If it is unequal life, okay, if it is unequal life, then you do annualized NPV and compare. Wherever the annualized NPV is more, that is the best project. Second thing, the conflict in NPV and IRR can occur. So what you are telling is that good IRR and good NPV, which I should. So conflict in NPV and IRR. So NPV and IRR conflict can affect only because of two cases. One is unequal life. Unequal life na annualized NPV. Second is unequal cash flows. So unequal cash flows na MIRR calculate pannu. Okay, but that is what. Okay, so calculate MIRR and then you choose it, or calculate. And usually NPV is the best measure. Okay, but NPV is the best measure usually. That is what I'm telling. Otherwise, the concept is unequal life and unequal cash flow. Unequal cash flow na modified IRR. Unequal life na annualized NPV. Okay, that is what is the concept. Okay, fine. So yeah, whenever you get a question paper, first to take the FM, okay, first to take the FM, and formulas will be in your mind, correct? ஏன்னா எக்ஸாம்க்கு முன்னாடி தான் எல்லா formulas skim பண்ணிருப்பேன். So formulas, if it is in your mind na, if the question is coming, you're seeing dividend model problem, Walter's model, just write the formula in the question paper, okay, Walter's model. What will happen na, in the end, if you're in the pressure na, in the pressure la formula மறக்கிறதுக்கு chances இருக்குது, correct? There are chances that you will forget the formula. So in that case, okay, in that case, if you have actually written the formula, it is actually stamped in the paper. Once it is stamped in the paper, it will be very easy, okay, for you, and you will also get the confidence. You know the formula, you know the answer. If you know the formula, you know the answer. Answer is nothing but applying the formula and getting silly mistakes mattum pannalana, okay va. So that is what I'm trying to tell. If you're writing the formula, write the formula in the pencil, in the question paper, in the starting itself, so that you will be getting confidence, okay. So financial management is nothing but formulas and formats. So formulas, formats, understanding conceptual, here and there some adjustments, okay. Inter-level financial management, very easy, okay, very easy. You can easily be able to handle, and you 50 marks paper now, I'm telling you, you guys will score 40 plus marks, okay. 40 plus marks very easily you can score, provided you are learning theory also, okay. Provided you are learning theory you're not learning, 10 marks அப்படியே gone, okay. So provide you learn the theory also. So okay, well, this is something that was from my side, okay. So with this, thank you for a patient listening. Thank you very much, okay. And okay, few students have to give me a treat, okay. So few students have to give me a treat after the examination. You message me how was your paper, and how, okay, how helpful I was, and what is the support that you want from my side. Even after the examination, I will be there for you to support, okay. Anything for that matter, okay. And Kerala, definitely I'm visiting Kerala, and anything if you want to tell, you can, okay, you can tell in the comment section now. So I'll be seeing and then I will be replying, okay. And if the doubts are over, we will be ending this end stream, okay. We'll be ending this end stream. All others, if you feel that, okay, you guys are comfortable, you can leave this, or if you want to interact something, you can actually there. My number, lively, you're asking my number. Okay, I will give my number. Okay, I'll give my number. Why I'm giving my number? Not to do prank calls and lot of messages and all. Just, okay, just so that you will, you guys can actually have a connect with me. Okay, so this is my number 90256 73914. 90256 73914. Okay, so after the examination you all can message, and you can tell me how you felt, the review, the feedback, all these are very much appreciated, or the suggestions, criticisms are also appreciated. I really like if students are very curious to know. Okay, and trust me, I'll be there for you to support till the examination and even after the examination. Okay, so thank you very much. Okay, thank you very, very much, and see you all in the next stage. So, this is your FM faculty, Tofik Tufail, signing off.